Yo, what is up, everyone? Welcome to another stream. Good morning. Buran Alim says, let's go, get your coffee, sip and poop, ready for the day. One Opportunity says, already had my first poop of the day, second coffee incoming. I had the sip, not the poop. So, good morning from Florida. What's up? Good morning, James. Anyway, so what do we have on the agenda except talking about bowel movements? We have the dollar and the intervention. Quite a big move, quite a significant drop. No sense in trying to hunt for an entry here. No sense in trying to chase the price. I know this looks pretty enticing. I know it looks pretty bearish, but yeah, I guess it's bringing a lot of weakness into the dollar, a lot of strength into the yen. So the yields doing nothing much, but gold is definitely recovering. Stocks are kind of flat, not doing much, but most of the dollar pairs are doing not so great actually. Not so great. My AU is doing well though. My AU position is doing fine. My Aussie NZD position is in some pretty decent profits, so that is working out nicely. Euro yen and USD yen. So the yen pairs seem to be moving the most. The yen pairs definitely seem to be moving the most. Let's look at the currency strength. So the yen is an absolute rock star. On the day, massive movement. Congrats to anyone that possibly caught this move. It's a pretty big one. Looks like they're gonna intervene and try and continue to push UJ lower. Looks like they have really committed. Now, I don't really understand why they would not do back-to-back rate hikes, or maybe they plan to do it, but I would say a much more effective tactic and a much more capital efficient tactic would be to do back-to-back rate hikes. But I'm guessing they just don't want to touch the interest rate. And then you run into an issue where you get an intervention and then you get a slow kind of grind higher like this. So the price kind of retraces a lot of the intervention. It's what you saw a couple of times before. You saw it here. You saw it here. You were starting to see it from the big one. You started to see it here. What's the size of this move? By the way, interventions are usually 3 to 4%. So I guess we still have a little bit of room to go for today, maybe to these lows, for it to be a 3% move. But yeah, if I'm being honest, I'm expecting this to slowly start retracing then. That's something that I'm expecting. I guess they just want to slow the appreciation of UJ. I think they understand that it's not going to be possible. If they don't commit to actual consecutive rate hikes, I think they understand that doing this just with an intervention is not going to be possible. But if they intervene here and there, or if there is some chatter about a possible intervention, well, then they can slow the appreciation of the price. So instead of seeing this, you saw this, where the price drops and then slowly grinds up, drops, slowly grinds up, drops, slowly grinds up. But we know the key level. We definitely know the pain level, it's 160. So a bit higher, 160 like this. This is the pain level. See, we hit the 160, boom, they drop it. Now, it could also be the case where you're getting the GPIFs, the Japanese pension funds, finally starting to kick in, finally starting to push this price lower. So what I've been blabbing on about for a long time now, for weeks now, is the yen appreciation, and all of the pension funds basically selling foreign assets and buying domestic. Now, the mechanics, the impact is that the yen should appreciate from this mechanism. We have been getting a lot of silence, but this doesn't seem like a one-time intervention anymore. So this drop possibly was, drop that happened 2nd of September, 3 p.m. But now you can see just a slow burner lower. Every single hourly candle is going lower and lower and lower. So this could be the actual pension fund starting to kick in. And intervention looks like this. So intervention looks like this. Massive candle, retrace. Massive candle, retrace. Massive candle, retrace. While a more slower burn would be this. Slow burn lower. So that is what could be happening, and pretty good opportunity to trade. Pretty good opportunity. Although the impact on most other dollar pairs is not is not so prevalent. As far as I can see, this is mostly impacting. So this is mostly impacting the yen pairs, right? Let's take a look at gold. Gold is starting to go up a little bit, bounced off of the sorry. So it bounced off of the level where exactly I had my stop loss, so got taken out by a couple of pips. Now it's moving back to my break-even level. A bit tough to watch, but what you're going to do, let me just remove this because I don't want to look at it anymore. Silver starting to recover a little bit as well. Oil is up. Oh, this is not good. This is not good. So Brent is up. Damn. Now we're still in the range that I defined before, which would be 85 to 110. That would be the kind of the elevated range. But we're starting to move to the top of that range. I would say if we break this, my thesis is invalidated and we can expect some higher inflation. The Hormuz traffic has been updated, by the way. If you're following this, last update August 30, transit calls near zero, transit trade volume near zero as well. So that's what we're getting in the Strait. The Strait is completely closed. Nothing is passing through. That's where you're getting the elevated inflation print, right? Or sorry, not the elevated inflation, but the elevated price of oil. US oil is up on the day as well. I mean, there's a different correlation between Brent and US oil, but the Brent is a better indicator. So if you wanna find the main thing to follow for the Middle East, it's most likely gonna be the Brent price. Let's run through the breaking news. So as far as the market moving, we had nothing much. But if we focus on Forex, we will for sure find something. Japan's top currency diplomat ready to continue the battle on FX. Japanese yen strengthens following hawkish BOJ comments. I don't think it's BOJ comments. I think it's some sort of fundamental reason in the background. So let's see. BOJ mulls hiking interest rates to 1.25 in September meeting. I think there's a high chance that they hike. But then the question is, will they do back-to-back rate hikes? Or is it just one hike and then a pause? That's the question. I'm basically focusing on the news that is in red, on the red folder news. That is the most market impactful. China, Australia, Japan, RBNZ. Okay, we have a lot of RBNZ stuff, but this is from September 2nd, so that's pretty old news now. Trump on Iran, renewed campaign won't continue for too long. Again, do I care about this? No. I usually just ignore what is from Trump. And I'm going to bring it to the morning yesterday. So Bank of Canada, multiple rate increases could be needed if we felt inflation is a problem. So I think that the Bank of Canada meeting was a bit hawkish yesterday. Canadian swap market prices in 75% chance of a Bank of Canada rate hike. Upside risk to inflation. Yeah, it was a bit hawkish. It was a bit hawkish. ADP is not really something I look at. From my experience, ADP has not been market moving, so it's not something that I focus on. So yeah, that's about it. We're back to yesterday morning. Let's close out the breaking news. Let's look at the calendar as well. What do we have here? So ISM manufacturing came in pretty close to the forecast. Aussie GDP, we got the RBNZ, we got the Bank of Canada. So this was bullish for the Aussies. The GDP print was bullish for the Aussie. The RBNZ was more dovish than expected. So yes, they hiked the rate. They raised the interest rate from 2.5 to 2.75. But forward guidance was a bit dovish. So before the meeting, the market was pricing in a bunch of rate hikes. Now, not so much. Plus, if you look at poly market and you look at this, there's the elections in New Zealand. They're expiring or they're ending in November 6th. Now, do you think that the RBNZ is going to hike going into the election? I wouldn't say so. I don't think that they would do that. So I think the next meeting is a pause. And I think in some cases, the markets are still pricing in a hike for the New Zealand dollar for the next meeting. So if you go to Aussie NZD, yeah, I think this has more upside to go. I think Aussie NZD has a bit more upside to go. Also, give me 1 second. I'm going to go grab a glass of water and I'll be back. Okay. So good morning to everyone. Waiting for the 4-hour chart to form a higher low on gold, seeing whether it holds before placing a buy. I'm not really looking at gold at the moment. I mean, it has recovered, but do I want to buy right now? No, not at the moment. Not at the moment. Waiting for the 4-hour chart to form a higher low on gold, seeing whether it holds. Sluggy says, if only Max had been on the desk. I think he actually did trade Swiss yen. I think he sent me a message. I'm going to have to take a look, but I think he was in a sell on Swiss yen. So I think he did manage to bank some profit there. Gold and silver. Hi, Marco. I managed to catch this UJ move at 160. Awesome. Great work. Why is gold up almost 1% when the dollar is down and US oil is up? I don't know. Maybe a recovery from all the selling. Maybe a brief pause from all of the selling that we saw. We'll see. The question is, can this fully recover? Or will this fail? I don't want to play it at the moment. The only thing holding up the stock market is AI. If that cracks, I don't even want to think about the consequences. Tony, what's up? Looking for a weak NFP, USD weakness against the Swiss. I'm looking for a weaker dollar as well. Sluggy says risk is still dovish for RBNZ. Yes, Marco, I like Aussie NZD longs, but gotta wait for a break and a retest. Yes, definitely. This level is overextended. So very far away from let's say a good entry level, and a good entry level would potentially be this level of support. But if it does pull back, or if maybe the 20 EMA goes up and the price kind of hits the 20, it's not a bad area for entries. Not a bad area to enter there. Update on gold, don't care much about resistance. He did catch Swiss yen. Cool, amazing. So congrats to Max. I think he sold somewhere here, so that's a really, really good achievement, and a big congrats to him. Anyone else having issues with TradingView, disconnecting brokers? I don't use TradingView for trade execution, so I don't know much about it, and I can't help you much. Sorry about that. Also, let me put the banner up. Since I forgot about it, let's put Discord. Okay, we have the right banner now. Marco, I don't trust the JPY. Well, the main thing about it is this is either an intervention or is the pension funds selling foreign assets and buying domestic in the background and kind of slowly churning, slowly appreciating the yen, right? Because if you zoom in on UJ, 1 hour, you can see a difference between this candle and these smaller ones. So especially if you go back, this is a clear intervention right here, this candle. Probably this one as well, this one as well. But right now, you're getting a different price action. I would say this is not an intervention. This is a slow burner that is happening in the background. Now, the Asia session will soon close. Let me see current time in Tokyo. No, it's actually already closed. So I guess the yen buying will or should die down a little bit. If we get some follow through, then that will be a big sign that the yen is ready to continue even lower. We'll see. Most of the activity seems to be with the yen now. I was looking at euro yen to sell. Of course, right now it's gone too far away from any potential entry level. It's overextended. I was looking for maybe a pullback to the 20 MA from this candle, right? So something like this. And then a potential sell setup. But things have changed. Things have definitely changed. I mean, we got a massive meltdown. So right now I'm reassessing the situation. Your question may be, why did I pick Euro yen instead of USD yen or Swiss yen? Well, USD JPY swaps are very negative. So holding a sell setup on USD JPY is a very expensive proposition. Swiss yen is actually not bad. So I got taken out of my previous short at plus 1.6%. I probably should have re-entered, if I'm being honest. I probably should have re-entered, but it is what it is. Euro yen I really like because the euro going into this winter could be a great currency to sell. I'm actually looking at the Euro Aussie as well. Euro Aussie, which is slowly approaching this level of support. Essentially, energy prices are elevated. See? Brent is elevated. Winter is coming. Europe is a massive importer of energy, and they use energy for heating. So winter is coming. If it's going to be a cold winter, they're going to need more energy, and they're going to need more euros to buy the same amount of energy as last year, right? Because energy prices are elevated. So that can introduce selling pressure on the euro, and that is bearish for the currency. My pick personally is the Euro Aussie. Do we have it on the list here? No. Let me put it on the list. Euro Aussie. Let's put it on the watch list. Euro yen is overextended, so that's a no-go there. Euro Aussie though, you want to pair a strong currency with a weak one. So if I'm betting that the euro is weak, you can do the yen. The yen is pretty strong at the moment, but the price has probably run away from you. Or you can do the Aussie. Aussie is performing pretty well at the moment. Aussie dollar, Aussie NZD, and now the Euro Aussie is starting to approach a key level. So a break and retest is not bad. I have an alert set. If we hit the alert, if we break lower, if we break down the support level, it's going to be game on for me to enter. I actually really like this trade. Yes, I know we're sitting, or there's also some pretty clear support a bit lower. But hey, if I can get a nice entry, it gives me some breathing room for the market to try and attempt take out this support level. So Euro Aussie, not bad, especially if the Aussie continues with the strength. Shorting indices is such a tough trade to pull. Yeah, it's not something that I'm doing ever. Well, I think I had a trade or two in the last 1 year shorting indices, and it actually worked out, but it's tough. Wait for Friday NFP, and it could dip lower for gold, stronger dollar. BOJ rate hike to save Japanese yen. Marco, if you still want to play dollar short on NFP, Aussie USD is a decent pick. Yeah, tomorrow I'm preparing for the NFP. It's gonna be at 14:30, right? So what is it? Friday at 14:30 my time, local time. My game plan is this. I'm gonna build up some scenarios. Anytime that you want to trade a specific event, you first need to write down specific scenarios. Second, you need to calculate the position sizing in advance so that you can be fast with execution. You can be fast on your feet, right? So for NFP, I'm looking at the Aussie dollar as the best potential candidate to sell the dollar. And I'm looking for a specific print. I'm looking for a low print or negative. If we come out 30K, 40K, 50K, it's not gonna be market moving. If it comes out at 100K, it means I need to sell Aussie dollar, which I really don't want to do. But what fits my longer term picture would be buying the Aussie dollar. So if I can get in on a better price and get in on a nice quick scalp, if the NFP comes out 0 or negative, I really like that trade idea. So I'm gonna be watching it. I think in the first minute or two, you can place a nice trade. I think it could definitely impact the Fed watch tool. I think it would cause a larger term move, because if the NFP comes out weak, the Fed is probably not gonna hike. Hiking into a weak NFP, previous number was negative. If this number is negative, I would say hiking into that is something that the Fed will not do. So that's the trade that I have. Going into it, of course, as I mentioned, I will build up the scenarios. So maybe 3 to 4 scenarios is usually what professional traders do. If you follow the main guy on DarwinX, which is going to be THA, he specifically trades events like NFP, PPI, CPI, central bank meetings, Fed, RBA, RBNZ, and most of the time he builds 3 to 4 scenarios, most likely scenarios, tries to look at the outcome and tries to look at what kind of a mispricing would be profitable to see. So I'm gonna do more work on that tomorrow during my second segment. If you want to get the schedule for the stream, you can go to the A1 Trading website. See? So Friday, this is the start time. This is my local time, so GMT +2. So 12:30 my time, 11:30 London time, I believe, is the start time. Trump is going to announce for the 404th time that the deal is underway and the strait is open. The only reason why CHF is preferred as a funding currency is the intervention risk by the MOFG. Different from that, CHF is the best safe haven. The problem with having the Swiss franc as the funding currency is this. The chart mostly goes down. So with the dollar yen, the chart most of the time has been going up, which means you collect positive swap and you get the appreciation of the price. While for dollar Swiss, you get the opposite. You get the positive swap, but you get the depreciation of the price. So the income of the swap is negated by the depreciation here. And it's not just dollar Swiss, it's Euro Swiss, it's Aussie Swiss. Swiss, for some reason, is a very, very strong currency when it comes to a longer term trend, like the monthly, like looking at the trend on the monthly chart. I forgot you were already in Aussie longs. Yeah, but I don't have a lot of size. I took half off near these levels. I put the stop loss to break even. So now I'm probably looking to add some more size, add some more risk to the position. So I want to have more exposure. I also got taken out of gold, which was supposed to be my bet. This was supposed to be a bet on a stronger or a weaker dollar alongside of the AU. Now I'm out of this position right here. So I need to think of something else. Aussie dollar is still the best pick in my opinion. Still the best way to go. Okay, so is the intervention ongoing right now still? A little bit. Below 50 is negative. Any trades on Sir? Yep, I have an Aussie dollar long. I have the Aussie NZD long as well. I'm looking to sell Euro Aussie if we break this level of support. Also, let me look at the edge finder. And let's run through the top setups for the Euro Aussie. Are you in Scandinavia? No, I wish. Well, it's pretty cold there, so I don't wish I was there, but I'm in Croatia. Inland, unfortunately, not by the sea. If I was by the sea, it would be great. But inland sucks ass. Euro Aussie bearish, -5. Okay, awesome. Great. If we can get a break of this level of support, break and retest, it's going to be game on. Game on to sell. NFP would be hot. I guess oil USD to rise. Hello. Okay, sir. Thank you. No worries. I want to mention, if you guys want to join the A1 Trading Discord, you can join for free by scanning the QR code on the screen, finding the link in the description of the video, or I'll post the link in the comments right now. So let me go to my files and stream links. Copy. In the comments, you'll find the link now. So you can join for free, take a look, check it out. If you want to become a paid member or get the Edge Finder, get the stock box, I have a discount code for you. So the code Marco gets you 15% off A1 Trading Discord, Edge Finder, stock box. Okay, so 15% off on anything that you're interested in. A1 Trading Discord, like the paid version, you get all of our trades, all of our signals, all of our ideas. It's not just me, it is Nick, Iwind, Alan. So Alan is a new member that's presenting trade ideas. It's Chris Pulver, and a bunch of other profitable traders. For example, you have Max, who managed to catch this huge sell-off in Swiss yen. So you get Sluggy as well, you get Robohola, a bunch of names. So a bunch of good traders in there that you can work with. Anyway, I still have 2 more minutes, so let's see what we can use to wrap it up. Then you have James coming on. So oil is up and continuing to go up. So we'll see what will happen with that. Bitcoin is still in no man's land. As far as crypto goes, it's not for me. It's still pretty flat here. I need it either to break up or down. Just give me some sort of movement. But to be honest, I'm not looking to play crypto. I would much rather do gold, especially if we get more of the debasement trade. If the US Treasury decides to do something with the long end yield, well, gold is going to be the first thing on the list. Gold is the best bet for the debasement trade. Gold is always the main store of value. So the moment you get some sort of a quantitative easing, injection of liquidity, hurting the US dollar, debasement trade, gold goes up. So just take a look at what happened when Besant made the announcement about injecting or doing buybacks on the long end. You got an explosion in gold. So if that continues, gold is gonna appreciate a lot. Anyway, that's it for my segment. You can catch me again in 2 hours. You have James coming on in 30 seconds. Thank you for watching and good luck. I'll see you in the next one.
If you're looking to get funded and want to save big on prop firms, check out our website, a1trading.com. On our website, we have a massive catalog of different sponsors and prop firms that are offering really competitive prices to our live stream viewers. On the screen right now, you see a QR code. If you scan that, it'll take you to this page that I'm looking at to scan all the different offers. You can also filter by one-step and two-step accounts. You can also look at futures, Forex and CFD prop firms, and even prop firms offering stocks. You can also select your preferred prop firm challenge size and check out our menu at the top for tons of different prop firm perks and giveaways. For example, every Monday we do a weekly prop firm giveaway that you can sign up and add your name into the hat for free. Additionally, we have prop firm reviews for notable firms, and we even have a side-by-side comparison tool where you can compare two firms head-to-head. Save big and find the right prop firm for you over on our website, www.a1trading.com. Thanks to our various sponsors who make this show possible. Now back to the content.
Hello, ladies and gentlemen. How is everyone doing? Happy Thursday. Hope everyone's well. So, what are we looking at today? Well, we've got some news coming out later. We have got initial jobless claims, ISM non-manufacturing PMI, ISM services PMI. And then tomorrow we have NFP unemployment rate. And that seems to be pretty much it in terms of red folder news. Sluggy, hello. Good day, James. Good day to you as well. Hello, Young SD Gerjo, whatever your name is. Hello to you as well. So not much on my radar today. I'm going into tomorrow pretty flat, to be honest with you. So in terms of positions, I'm still in dollar yen longs. As I told you, these are tiny positions. So actually this trade or the positioning here has completely reversed. So obviously I was buying here, and I bought again here, you know, running really smooth, benefiting from the carry trade. Very nice. And now we're sinking lower, which actually is a good thing. I'm quite happy about this because then I can add in even more. So the idea behind this is basically just a continuation of the carry trade. There are obviously talks about things, you know, BOJ hiking rates. It's not a concern for me, to be honest with you, especially with what we might be seeing from the Fed regarding rate hikes as well. So if the BOJ hikes rates and the Fed hikes rates, then what do we expect? Well, the yield gap remains. It's just both rates have continued higher or moved higher. Does that make sense? So yeah, this whole situation with the yen, really not a concern. Again, I'm just using it as a buying the dip opportunity when we end up moving, or if we end up moving a little bit lower. So yeah, I'm quite happy with dollar yen at the moment, although obviously if you're in short-term positions with stop losses, you might have been liquidated pretty quickly on that one. Gold has embarrassed me completely. Well, actually, yes and no, kind of. So we did have a headline that came in this morning from Putin, our good friend in Russia. What did it say? Let me just pull it up. I can't remember exactly what it said word for word. Here we go. Putin, there is a chance for constructive peace talks, and that sent the equities to the upside. We saw the DAX, we saw the Nasdaq, the S&P, all the risk markets went to the upside. Also, gold went to the upside too on the back of that. So that has been quite a nice bolster for gold at the moment. Whether that will follow through, I don't know. We'll have to just wait and see. However, what I was talking about yesterday hasn't disappeared. I'm still on the same standpoint. I'm not necessarily really bearish on gold. I'm not sure exactly what I said yesterday, but I don't want that to be perception in terms of, you know, James is saying gold is really bearish. It's going down to 3,000 or 3,500. That is an idea I've got. You know, again, these positions are with that idea. They're very small, no stop losses, DCA approach. Now, I did cut my position. I had another one. Where was it? I think it was around here. And I cut that one basically break even. So that's not great because obviously that now it would be in profit, but not a huge deal. My other position was stopped out. So I had a total of 4 trades. I think my entry was something like this on this position with a stop loss at the low. It was taken out. So that one's not great. So yeah, gold has embarrassed me slightly over the past sort of 48 hours, but it's okay. Again, no real damage done, no problems. Now, in terms of short term on gold, what could we look for? Well, It's tricky because gold is bullish. I don't think anyone is going to sit and deny the idea that gold is bullish. You know, we've got the 200 and the 50 moving averages to the upside here on the H4. We had the moving average crossover on the daily time frame over here. So we can see we've established a really nice bullish trend again on the daily, really strong wick to the downside, retested the 200 and rejection back to the upside. It's looking great. So the bullish idea we spoke about yesterday with the fib from the low here or the low of the range to the high, bounce off the sort of fib zone near the 50% retracement. And again, that 200 moving average so far is playing out quite nicely. Now, of course, I'm not in it, so I don't want to sit here as Captain Hindsight and be like, oh, I told you so because I didn't execute. So it doesn't really matter. But the big but is I'm still not convinced on gold being bullish. So as we said earlier, or as I said earlier, the dollar actually this week or so far actually is quite significantly bearish, but last week's weekly candle was very strong. We do have news coming out tomorrow, again, NFP and unemployment. I think we've got wage data as well tomorrow. Yields are continuing to move higher. We do have the markets also expecting these rate hikes by the Fed, or increased probabilities of rate hikes, I should say. So let's go over here. So we can see it has had a slight drop. You know, we're at 63. We're now down at 60, but still, that is quite a large repricing, basically a double repricing of what we saw last week at 35%. So, yeah, that's basically summarizing my position on gold. I'm pretty neutral. I can't really sit here with a solid idea and say gold is bullish or gold is bearish. I just need to wait and see what the data is tomorrow before I can form a more solidified opinion. Obviously, as I said, I'm still long. So if it does continue bullish and the data supports that idea, I can get back into the position, no problem. So yeah, we'll just have to wait and see. Christoph, hello. Do you think NFP will be hot or cold? Let me just see what the forecast is for NFP. Just give me a second here. Forecast is 58K. Obviously, the previous was 23K. So I'll be honest, I would be very surprised if NFP undershoots previous and forecast, which, well, sorry, let me start. Let me start that again without stuttering. I would be very surprised if NFP undershoots the previous release at negative 23K. Whether it will meet the forecast of 50K and upwards, depends on which data provider you're looking at, is a different question. I wouldn't be overly confident in that idea. And that's purely based on the idea that we have had such a really bad release. And if we go to economic data, go to labor market data, we look at NFP, we can see overall it is on a downwards trajectory. Oops, hold on. Didn't mean to click reset there. I'll be honest, I love the A1 guys, but that bar really gets to me sometimes. I don't know how to put the time frame back. Let me see. Can we do like the past 4 years? Yeah, we can. So we can see, as I was saying, NFP overall is on a downwards trajectory. Bearing in mind, this is back from 2022. So we could get, and this is more of a, obviously, pattern idea rather than it being based on the actual economic landscape of the US at the moment. So these obviously, larger surprises to the upside do happen, but it doesn't mean that we are now, starting a new upwards trend in NFP. If anything, actually, it's more of an anomaly to get a higher print, and then we just continue lower over time. So based on that, I can't really justify saying that the US is going to print a hot NFP. And then we can look at, the larger landscape or the more broad landscape of the labor market in general, which is, in my opinion, quite poor at the moment. So yeah, that's my stance. It's basically saying I think it will be higher than previous, but I wouldn't sit here with any confidence and say it's going to be anything special. I want to say special, I mean in terms of a massive print or a really bad print. I don't know, to be honest with you. James, OZAAA. I'm not sure what that means, but hello, Tony. What currency am I looking to take advantage of weak NFP? Well, if NFP does come out weak, then I'm going to continue to play on my gold idea here. So I'll continue to scale into gold. Dollar yen could provide another opportunity to buy lower. I'm completely fine with that idea. Again, the whole premise I've got with dollar yen is buying dips. I'm not yet in a position where I'm looking to exit the position or sell this market. The equities or the indices markets, I don't really have much for, to be honest, right now, regarding NFP specifically. Other than that, maybe a euro dollar long. I quite like the rejection we've seen here off the H4 moving average. The daily looks like we could be getting a little bit of a cross here. The weekly's bullish, the monthly is still bearish. So I think so one way to look at it, and again, this is more of a simplified approach rather than, you know, trying to forecast too much. But if NFP does come in weak, but we see some other data that could strengthen the dollar in the near term, so whether, again, that's the Fed doubling down on the hawkish stance or hotter CPI, it could be a number of different things that could bolster the dollar, again, sort of in a medium to short-term idea. Cooler NFP could provide euro dollar some upside that would allow me then actually to get short, playing on this higher time frame, longer term outlook of bearish euro dollar. Also, you get quite nice swaps from shorting euro dollar as well, so something to keep in mind. Funnily enough, that should be bullish for equities if yield gap remains. Maybe not bullish, but also not bearish. Are you talking about the dollar yen that we just spoke about, Sluggy, or what? Price goes up, then comes down, and you're saying it's bullish? Live Zero, I'm not sure if you're trolling me, but I really hope you are, because that's an interesting statement to make. King of Kings, I'm good, thank you. How are you doing? According to previous data coming out, I think NFP is not going to be very hot. I wouldn't expect so either. I definitely wouldn't be putting money on a hot NFP. Dollar yen, yeah, I would agree with that, Sluggy. My JPY shorts, very nice. Are you short? Well, I'm guessing you are short if you said you're shorts. Let's see. Very nice. So if you, yeah, I mean, not much input I can say into that. If you're short on, well, if you're long yen, pretty much in any market, or maybe any market, you should be in some pretty nice money by now, I would expect. How much could the franc benefit from unwinding of the dollar yen as a carry trade? I honestly could not tell you, Christoph. I'm not sure. I'll tell you what we can do, actually, though. What we can do to which market? Should we just do dollar Swiss to keep it simple? We'll do dollar Swiss, and what we can do is we'll go to the daily time frame and we can compare it to dollar yen. So we'll go USD JPY, and we'll add this. We'll do the same pay. Oh, wait, hold on. That's not what I meant to do. Just bear with me. USD JPY. We'll do the same percent scale. There we go. So we can go back and we can look at when we saw the unwinding. Was it back in, it wasn't last year, it's 2024 here. So what we can see in line, let me draw the box here. Let's undo the extended right. There we go. So what we can see, when dollar yen had its unwind during this period from, when was this? July to September. So it was a multi-month move to the downside on dollar yen. Dollar Swiss followed basically the same thing. I mean, obviously they're both dollar pairs, so they will be following in some respects, not one-to-one, obviously. But we can see that correlation is there. We can see dollar yen also had a move to the downside here. Dollar Swiss followed. So I would expect, Christoph, again, specifically for dollar Swiss and dollar yen relations, if we saw an unwinding of dollar yen, then likely dollar Swiss will follow in the footsteps. Again, both dollar pairs, so it's kind of expected. Maybe that wasn't the best pick on my part, but hope that answers your question somewhat. Right, what's next? So I shorted 214 yesterday. Short from 219. I was holding. Okay, so you've been short from quite a good price, I think. Let me just see where that was. So you were short from, yeah, basically the tippy top. It sounds like, anyway. So that's good. Well done. If NFP prints 50K, it's considered bearish. Yes. So yeah, that is bearish because it's a miss from the forecast, and that's basically how the markets work. They don't really look at previous in terms of the actual release on the news event. So they'll say, okay, we're expecting the news to be worse, so we're going to price that in. So, you know, NFP, for example, expectation is 50K or 53K or whatever it was. This is what the markets have priced in. That's what they're expecting, hence forecast or consensus. If the data print doesn't match that, it could get sold off even more, or it could get bought up even more, depending on obviously which way it beats or misses. So it's basically the change in expectation or the repricing that happens on the back of that. Gold shorted the highs last week and hedged and bought the test of the H4 200 moving average on gold. Mega, it sounds like you're doing quite well. Short dollar yen, long gold, very nice. Closing buys on gold, very good. Well, congratulations. I'm glad you've made some money. Sounds like a pretty good way to end off the week. Almost Thursday, not Friday, but we're close. Almost the weekend. Right, so let's see what we've got on the menu for today. Remember, I told you the high oil price will force the BOJ. Yeah, but again, it's not a huge concern for me. If oil is rising, the BOJ is forced to hike their rates, then very likely we're going to see other central banks, maybe not hike as well, but at least take some sort of hawkish approach. So yeah, we'll see. I mean, the BOJ obviously will have slightly more effect because the markets are anticipating it. It's a bit of a bigger deal for the Bank of Japan to hike rates as opposed to the Fed, for example. But fundamentally speaking, the spread between the two, in theory, will remain, as again, expecting the Fed to hike rates. They might not, and in that case, then yes, we could see further downside, but yeah, we'll see. Okay, so Aussie New Zealand still getting a bullish read. It's actually increased. It's now the top reading, very bullish of positive 10, which is fantastic, but also quite painful at the same time. So some of you will remember I actually turned quite bullish on Aussie New Zealand like 1 to 2 weeks ago, and the idea really was quite simple. We were at the hold on, let me fix this again. At the time, we were around this level of resistance, so I wanted to see either a pullback to get in on a 50% sort of fib pullback and continuation higher, or a break, retest, and then continuation. We've not had either. We just had a complete break above. I can't do anything with this. So I think Marco is in this position. So congrats to him. It's a great trade to be sat through. But, for me, that's left on the sidelines like a cook, it's a bit sad. So I would still like to get involved at some point, but it's now really a case of how do we do that, or how do I do that? So I'm really just looking at the next levels, previous levels. So again, the same level I was looking at earlier, we are now coming up to this daily level of resistance. So it's a case really of waiting for a pullback. We could see one off this level, maybe some sort of triple top idea. Again, we'll have to just wait and see. But I think overall, being a buyer of Aussie New Zealand is the best way to go. The RSI is slightly overbought down here as well, which does indicate we might be a little bit overbought. We could come back down for a little bit of a retracement or pullback. What else do we have? Monthly timeframes flip bullish as well, which is quite interesting. The weekly is bullish. The H4 is bullish as well. Yeah, I'm not seeing much else in terms of identifying an entry. I think, again, we've kind of got it down. It's again, just a case really of waiting for a pullback. Something else I was mentioning, however, with this market is just the weekly time frame. We are coming into a significant area of left side potential resistance here. So the level we're currently at as well, we can see was previously resistance over here, turned support, acted as resistance again previously, on the previous high we formed. So I think, again, being a buyer, fundamentally speaking, technically, and on the trend is great. That it all aligns pretty perfectly. The downside is how much R&R do we actually get? So obviously it depends on where your stop loss is, but in terms of targets, we are really quite limited. So we could come up here, we could have quite a large mean reversion back to the downside. We could come up to here, have another, mean reversion. So it's really a case of not just paying attention to the weekly levels. Of course, we would need something to warrant that type of move. So I think in this specific case, it's even more important to pay attention to actually what's going on with the central bank and obviously the incoming data. It's always important to pay attention to that stuff, but because this market has already rallied so far, it's not done that, in 14 years, give or take, since this range. So yeah, I think the risk of a mean reversion is really, really high. Now, again, there's nothing to suggest that is the case yet, but that could change very quickly. All it takes is a central bank speech or something to flip in the data, change expectations, and that market goes right back down to the downside. Afternoon, James. Hope you're well. I'm good, thank you. How are you? What's my take on Nasdaq and the Dow? Appreciate your response. No problem. We'll take a look at the Nas and the Dow in a second. You joined at the best time, did you? Why is that? But hello, Bashi. I hope you're well. At what price level on USD JPY will you cut your losses? No, there isn't a price level. I'm not trading dollar yen based on price. I'm trading it based on thesis. So when the thesis breaks, then I'll close the trade. It's really as simple as that. Of course, there are constraints. So if the position or one of the, because obviously I've got 3 open, if one of those positions reaches 0.5% drawdown, I close it, look to reposition and add that position back at a better price. So that's the rough management. Of course, there are other things like if the position just continues to run to the downside with no signs of pulling back, I'll cut the trade, look to add in again at a lower price once things stabilize. But yeah, for now, I've got no concerns. Wait, hold on. Is gold scalping good? I don't know. I mean, you know, do you like cheese? Some people do, some people don't. It's a bit of an open-ended question. I would say, you know, generally speaking, yes, it's fine, but it depends how you approach it. Pound New Zealand hovering around the H4 fib. We'll take a look at that in a second. Why is dollar yen rallying? Been up since 4, packing. So with dollar yen, let me just do a quick checkup. It seems like an intervention, Alan. Let me just have a quick look. Fed repricing, JPY 1 month low. Yeah, no, I'm not seeing really anything that is. Oh, wait, hold on. Japan's top currency diplomat, ready to continue battle on FX. So yeah, I think it very, very likely is an intervention, but I actually don't have that information confirmed. But yeah, that is how it's seeming at the moment. But Alan, I remember you said you think dollar yen will go lower, and you are right. So I'll see you in the long positions. Oh, rally. Oh, yeah. Alan, I assumed you meant rallying to the downside, not to the upside. I haven't been trading due to mega volume, just letting it settle. Bashi, the volume is good. It's how you make some money. Just make sure you're on the right side. Meggy, you would revise the thesis. Why? I've got no problems with it. We have lower highs. I don't care. Again, as I said, I'm not trading the price action or the price. I'm trading the thesis. For now, it's not broken. The carry trade is alive, so is my position. For now, again, you know, when I'm talking about trade ideas and my opinions, it could always change. You know, I could end my segment in 40 minutes, and then, you know, the whole thing completely changed on a headline or a news release or whatever it may be. So don't take what I'm saying as gospel. It's just, you know, again, as I'm sat here right now, this is my opinion. It's abnormal. So my SL and stuff like, oh, right. Okay. Yeah, I suppose that is true, Bashi. Something to account for. Right. Okay, let's get back on topic. So what were we going to look at before we got distracted? So the Nasdaq and the Dow, and I think it was Pound New Zealand. The thing is, Christoph, we've looked at Pound New Zealand all week, and I can guarantee nothing's changed. It's still going to be in that daily range. so my answer automatically is going to be absolutely nothing. But we will definitely take another look. So what was it? The Nasdaq and the Dow, right? So what do we have? H4 moving averages have just actually crossed bearish, which is interesting, but not enough to really do anything with. Do we still have them bearish? We do kind of. So Russell, S&P, Dow, and Nasdaq, yes. So Nasdaq is bearish. So we obviously want to sort of approach it with that bearish bias, but I'm not really seeing much to actually get an entry. I suppose we could be looking at some sort of fib retracement, which actually has happened into the moving averages. I don't like this idea, and I'll explain why in a second. But following typical framework, again, edge find is bearish. We've got the fib retracement, and we do now have a downtrend that has just formed. The reason I don't like it, though, is because we have just sort of rejected this level of support. So we've double bottomed. Not great. I don't like that. And we've still got a very bullish trend here on the daily. We've not really seen any real signs of reversal on the higher time frames. Obviously, the monthly and the weekly are still very bullish as well. So, you know, something I said, I think I've said this for the past 3 days, but the downside of trading or specifically going short on things like Nasdaq, Dow, S&P is, generally speaking, you're going to be against the trend. So automatically it's very difficult, especially for me. That's how I trade. I'm a trend follower. So even if I get into a short position on the H4 or the 1 hour, whatever it may be, the daily, the weekly, and the monthly are still working against me. So yeah, not ideal. But I think there's probably opportunities, but again, I would need to see some sort of established trend form here. So although we do have the moving averages that have just crossed bearish, overall here, we're not doing anything. This is really just a range. So very easily, this market could return back to the highs and the moving averages just end up choppy. So I think the way, excuse me, the way I would really want to approach this is waiting for a break of this low. And then I could draw the fib from the high to wherever the low is printed and then wait for a pullback and then get short here and continue lower. So yeah, much more of a patient approach really is required on my side. Oil, S&P 500, and silver. Okay. So we'll take a look at oil first. Still continuing to the upside. It's not helping to bolster the dollar really at all, which is interesting. Yeah, so I mean, it's kind of what I've been saying. I think the easiest way for oil to go is to continue higher, at least until we get some sort of de-escalations in the Middle East. The problem is that we have these headlines, we get some sort of de-escalation talks and it just gets completely wiped out and we continue to see this war continue. Well, yeah, the war just continues. And naturally on the back of that, we are going to see oil prices higher until the strait reopens fully. And even if that does happen, it's still going to take time for those tankers to get back on track and in time and in line with what we're used to. But on top of that, we've also got to consider the insurance costs. Insurance is massively above what it was, again, because it's a war, the risk of destruction is significantly higher. So insurance prices are all, again, skyrocketed. So it's a really difficult situation. So yeah, all of this really does just lead me to expect oil to continue higher. Now, with that said, it doesn't mean that I am looking to actually be a buyer of oil. I'd rather just stay away just due to the headline risk. So even if we do get, again, those headlines that come out with some sort of, misleading peace deal or de-escalate. Oh, I nearly spilled my coffee all over my computer then. That was bad. Something, again, positive, you would say. That could take out the long positions, and then we actually just continue higher over the shorter term or medium to longer term. So yeah, it's just not something I'm gonna expose myself to. But again, I would expect it to just continue to drift higher over time. So the S&P was next. Where's the S&P? Right here. Yeah, so this one's also quite tricky because it is very bearish on the edge finder with a score of -9. So it's not something that I would be willing to ignore. But on a technical side here, it looks really bullish. We've broken the previous highs. We've had this retest. We're touching up near the 50 daily moving average. So yeah, the technical side looks great to be a buyer. So I've got no interest in being short, but then I've also got no interest in being a buyer because the edge finder is bearish. So I'm getting pulled in two different directions here, which is really annoying to deal with. So it's the same thing really as what I said with the Nasdaq, I think it was. In order for me to actually do something, I need to see a bearish trend be established. So I'd need to see a clear out of this level of structure that we're clearly holding at the moment, retest or some sort of pullback, then potentially looking to go short off that. But yeah, right now it's just too bullish for me to be interested on a technical side. It's abnormal. Oh, right, I already read that one. You're going to chill on the yen. I think that's the best idea. Yeah, so when I'm saying I'm long dollar yen, I do need to be very, very clear. The tiny, tiny position sizes, which is why I'm not bothered. I really don't care about this because the P&L on these trades at the moment, it's really, really negligible. So if it doesn't work and Mega is right in the idea that it just completely collapses or whatever it is he's saying, it just continues to run to the downside, it doesn't bother me too much. The risk is completely fine. I'm fully protected. But yeah, as I said, I would still expect it to continue to the upside, but it might take a little while for that to continue to happen. Or it could completely change, as I already said. I just realized trading analysis is basically you talking to yourself out loud about what you're seeing. Yeah, pretty much. Yeah, the thing is, when I do my videos, I normally do 3 or 4 different takes of the same section because, I mean, you've seen me on stream. I stutter, repeat myself. I'm really bad at talking. It's just not my strong suit in any way. So I'll sit and I'll have to edit the video and obviously cut the bits out. And it's just so embarrassing because I'm sat and I'm just, thank God no one hears me doing my video. I don't think I could do it if someone else was there. But yeah, I mean, I think it takes a certain type of person to be able to make videos and things. It took me about a year and a half of making videos to actually start feeling a bit more comfortable talking to myself in a room with no one else there. Russia said that, yeah, we already spoke about that. Bashi gave quite a lot of support this morning. I'm not sure if it's still continuing. But yeah, I mean, if we look at the DAX, actually, I traded, oops, that's not right. Yeah, the DAX, I was trading that this morning on, I mean, actually, it seems to have completely fallen apart here. But what you can see right here, this was the move this morning on that headline, Bashi, and that very quickly completely reversed that. So it does seem like the markets don't, well, not that they don't care because obviously we saw the reaction, but I think it's a case of the markets are just so so used to the same thing. Again, we get these headlines and then just get completely reversed. Obviously, we're normally expecting that from Trump regarding the Middle East, but it does seem like it's the same thing that the markets are experiencing at the moment with Putin. Hey, James, long time no see. Jeremy, yeah, I've not seen you in a while. How are you doing? I would never have guessed I'm new. Well, welcome to the stream. Making a simple video is brutal. Alan, yeah, I'm guessing you know the pain. it's tricky. I mute the rest of them most times and hang around for the chat. Fair enough, Mega. Recording the video only to find out the mic was disconnected. Oh my God, Alan. I remember I made some reels on the Edge Finder. I think I did about a 3-week batch because I was going away. I think it was when I went to Miami last year. I batch recorded loads of short form content, like more than enough for what I actually needed, but it was just in case. I filmed all of them back to back and then went to CapCut to edit them all. And I recorded in the wrong format. So like 1 FPS, you know, it was like 1 frame every second. I hit my head on the desk and walked away. Didn't re-record them. I'm not doing that. Anyway, enough of that. Pound Swiss for short. Yes, possibly. I do quite like it. It's something I've been talking about for a long time. I was just about to say this market seems to have collapsed, but I'm on the 5 minutes. So let's go back. Although actually, it does seem like it's on a very nice move to the downside. So what I was talking about Pound Swiss is so far looking like it might be coming into play. So I think, was it 3, maybe 4 weeks ago, Pound Swiss was bullish on the Edge Finder. The market was looking great. You know, even the daily was bullish. The H4 was rallying. It looked like a great trade. Now, what I was saying at the time was, yeah, you know, again, it looked like a great trade. I got no problems with it. But the one thing I would be really paying attention to is this weekly time frame, because the behavior is super clear. You know, we either do have these short-term rallies and end up breaking above this 200 weekly moving average. If we do that, very rarely do we actually hold above for any real significant period of time. It's normally a bit of a break and a bit of a false breakout. Then we just continue to rally to the downside and overall continue this downtrend, or we just don't meet the 200 at all, like we've had over here, and you know we kind of continue anyway. So what I'm trying to say is, my point really was, if you were in longs, what I would be watching is this 200 moving average to see. Or to use really as a level to take profits and actually look to maybe pivot short. So this could now be coming into play. The problem is, as I said, the daily has turned bullish. The H4 is still bullish. So what I would need to see is some sort. Oh, wait, it's the wrong one down here. What I would need to see is some sort of bearish catalyst on this time frame on the H4. So whether it's just a break of this level of structure and we end up retesting and continue lower, that could be also great. Or we have a pullback from here and then break, something along these lines. I just want to see this level get broken, and then maybe I could look to go short. Now, something to keep in mind about Pound Swiss is it's very expensive to hold short positions. The swaps are not great. So if you're a buyer, you can get paid quite nicely. If you're short, which again does line up with the overall trend, it's great to sit short. But if you're in it too long and the trade doesn't work out, so if you're stuck in a range bound trade short, again, you are going to be losing quite a lot of money if you are swing trading it. So just keep that in mind. Did we just get a new member? I'm saying we. Did A1 on Trading Nick. They did, or Nick did. So I'll say thank you on behalf of Nick for becoming a member of the channel. Alan's always having these tech issues. Bash, it happens to me as well. I remember, well, when it was hot in the UK a couple of weeks ago, my phone kept disconnecting from stream. I couldn't work out why. And then I realized it's because my phone was overheating. So I've never seen it before, but iPhones get the temperature warning. They just stop working. They won't let you do anything until the phone's cooled down. But yeah, it's really annoying. Honestly, technology's great, but man, it's got ridiculous problems sometimes. It's like, why is it overheating? It's inside. It's 2026. Put a fan in the phone or something. Hi, James. I caught sell position on dollar yen from 160 before tanked. If you're currently looking for buys or holding buy positions, are you still planning to stay in? Tatienda, I am, but that's because I positioned specifically for this scenario. So my positions on dollar yen are tiny. So I've got 3 positions. I think they're around 0.03 lot sizes, which for the account I'm trading this on, it's really not a big deal. So, you know, if you're in a swing position, you got a stop loss down here and you've risked 5%, you're probably going to be in some trouble. But again, because I've entered these positions fully aware that this could happen, you know, it's planned for. It's not a problem. So yeah. Anyway, that's actually just reminded me something I was talking about has come into play. So some of you may remember we were talking about the levels on dollar yen. So what I was saying, and again, I don't want this to come across as Captain Hindsight, because obviously I didn't say an intervention was going to come. I didn't go short, anything like that. But again, the idea did come out. So what I was talking about was the idea that the MOF was defending the 160 level. Excuse me. And obviously the markets were just viewing these dips as buying opportunities. You know, it was super simple, very straightforward. And every time they intervened around 160, the market very quickly reverted back. So they clearly gave up 160. The market went to 164. Very uncomfortable level. They obviously don't want dollar yen at that level. I mean, 160 was already uncomfortable enough. So then MOF intervenes. Fed also intervenes down here. Bring this price, or bring dollar yen back below 160. So at this point, one of my things that I was talking about was the idea that actually dollar yen might not go back to 160, because the strategy that is being, or could be in play, is that they don't want dollar yen back at 160. So they bring it back below 160, and then they can reuse 160 again as the new line in the sand, as they did previously. So it could be kind of this idea where we actually still see the lows get bought up, but we fail to break 160 continuously. That could be something, but I don't really care too much about that. We'll see what happens. So let's continue. What else is in the chart? James, what percent is oil up at the moment? It was 2% earlier. Where is it now? Well, I don't know. Oh, do you mean on the day? It's 2.28% on the change, but it depends where you're measuring from. I suppose they view the Dow setup as the same as Nasdaq, because Dow is actually, no, let's see. Yeah, Dow is exactly the same as the Nasdaq, Christoph. So yeah, I need to see a break of this level really, because I don't want to sell into this. We are still technically in a bullish trend, although kind of retesting the moving averages a little bit here. I think if you were really aggressive, you could be maybe looking to go short here, see if you can get, again, a sort of a preemptive position. It's not the way I like to trade. It's not something I would do, but I can sort of see the idea behind it. Pound New Zealand, I do apologize. Completely forgot to go over that one. I said I would. So Pound New Zealand has nothing going on. This is probably the worst market at the moment, and I'm getting asked to look at it on a daily basis, and I say the same thing. So to repeat myself, to repeat myself again, I can't do anything. I can't really give you any setup because there's just nothing here. So the Edge Finder is bullish. I think we've all noticed that at this point. The problem is the daily is stuck in this, granted, quite a large range, but still, there's nothing I can do here. The H4 also has nothing going on. So it's not even like the daily's in a range, but we could trade the H4. I can't do anything here either because we're still kind of in this range here. The moving averages are a little bit off. We are kind of downtrending, but we did break out. We created a new high. We're now very quickly reverting all of that. So yeah, there's not much I can really say or do here. I suppose there is maybe this. So, and this is me kind of forcing an idea. It's not something I would ever take. But yeah, if we do draw the fib from the low to the high, we can see we've got the fib zone and we do have the moving averages pulling into this zone as well. So this could be maybe some type of idea. But again, it's not something that I would take in a million years. James Bashi in my office now. Why? What have I done wrong? Hi, can I consider Aussie dollar for a long-term short? I don't know. Why? I mean, I don't know. If you're going to tell me a long-term short, you kind of need to tell me what the idea behind it is, because I would assume that there's some mean reversion. You're looking at central banks, or like what's the theory behind wanting to go short? Or is it technical? Is there like a big resistance you're looking at, or what? I need a bit of context. I'm scaling to Aussie yen buy. Let's see. How's Aussie yen doing? Is it still... It looks a little bit more healthy than dollar yen, but still not something I would be looking to buy just yet. Although, actually, let's just see. Is this a fib? Almost, kind of, maybe. Yeah, I suppose if you've got some bankroll and you're willing to take a little bit of risk, and this isn't financial advice, this is just my opinion, still buying yen pairs doesn't seem like a bad idea. However, you've got to be aware of the risks. Again, you've got to be aware that we might have the BOJ hike. You've got to be aware that we might now see 160 as, again, the new line in the sand. So we might see interventions to that level. So you need to pay attention to dollar yen if you're trading things like Aussie yen, pound yen, euro yen, and so on. So I do still see it as a buy, but I don't think it's as cut and dry as just buying the yen pairs and just hoping for the best. The thing is, I would love to go to Android, but I can't. I've got iPad, MacBook. It all is just in sync. AirDrop from all different devices. All my files are there. It's like everything is just so. It's all just so centralized. It's perfect. And if I get an Android, I'm going to break that whole synergy I've got between all my devices. And I can't do it, so I'm kind of trapped. And I've got, I've had an iPhone since I was 14-ish. So I've got like everything on there. My whole life is on the cloud. So it's like I can't go to Android. That'd just be betrayal. Also, I don't really like Android phones, but it's the only alternative, really. Nick is not here. Nick has left us. No, Josh, you're way too early for Nick. So Josh, I'm not sure if you've seen, but we have a new schedule. Well, it's not really that new anymore, but we do have a different schedule to what we had previously. So what you will find is our slots for myself, the guests and Nick and Chris and everyone else is a lot more consistent now. So we've got Marco on in the mornings, like first guest or first host. Then there's me for an hour, then Alan, then we have Nick, then Miko here, then you can see for yourself. But go on to the A1 site, you'll be able to see the schedule there. Android is really good. My friend's phone tech, and Android is much better, more expensive to fix. I don't know. I had an Android once for about 6 months and I couldn't do it. It was just too buggy. Everything crashed. It was slow. It was just there. And I didn't like the green bubbles. Anyway, right, we've barely done anything on the markets today. So let's just do a quick look because we've got about 15 minutes left. So as we said, we do have the US markets bearish. So again, the Dow, S&P, Russell, and Nasdaq, none of them really are in a position to actually do anything yet. The DAX short could be quite interesting, actually. Let's take a quick look at the DAX. Might be able to get something going on. Alan doing doubles these days? Yeah, he does. I think he does half an hour on his own, and I think he comes on after and does another half an hour with Marco. I think they do joint segments because Marco's on twice as well. Which phone? Oh, I don't know. It was like Samsung Galaxy S4 or something. I can't remember. It was years ago. Okay. So yeah, the DAX actually, it's tricky. This one's annoying actually, because it does look really good for a long position. Break, retest of the previous high over here. Daily looks great to be a buyer. H4 actually also looks really, really good, maybe. So actually the H4 could be an opportunity. So either we see a bounce off this level, in which case it's kind of invalidated, unless you drew a fib from this high to this low and maybe look to short the pullback. Again, a bit too aggressive and a bit too preemptive for me. Not interested in that. However, if we end up, having something like this where we break, where we, fail to really hold this 200 and we end up breaking lower, this could be a really good short position idea. But again, as I said, with the Nasdaq, the Dow, it's just a bit too early. I really need to see something develop a bit further, and then maybe I could get into a position. Yesterday, the picture perfect fib rejection on Aussie US dollar. Oh, was that? Was it this one, Christoph? I'm assuming it was. Yeah, that does look really good, actually. Yeah, I'm a little bit annoyed at myself because yesterday I was saying that I didn't really want to be involved in the dollar. I do slip more on the bullish side, but I couldn't really justify doing too much. So yeah, I'm a bit of a difficult position because I'm sat on the sidelines of basically everything at the moment. I was also stopped out of this trade. So I had an entry around here. I trailed my stop loss to, I think it was this low. And then, we've stopped out basically of this position. Now it's continuing to move higher. So yeah, a little bit frustrating for me, but it is what it is. James Conner flagship devices are flawless. I don't know. I'm not going to move from my phone. I'm just not going to do it, but I do want to. But now the question I've got really is, how good is the iPhone flip one going to be? Because I'll be honest, I hate the idea of having a flip phone. Like, I used to love them. I don't want a flip phone that's touchscreen, but I don't know. I might not have a choice. Good question. If both wars end, what happens to gold? Because there's no need to go to gold safe haven, but be down. Gold would be bullish in that case, Bashi, because it would be basically a yield play. So I would expect, because we would see more oil flow globally, not just from the Strait, but also from Russia, I would imagine that would ease a lot of energy prices. Inflation comes down, yields can come down as well. I mean, you can see actually the reaction on the 5 minute here. So again, this was, wait, hold on, where was it? What day are we on? I think it was here. Let me just double check. Yeah, it was around this period here. So gold did have a very bullish reaction off of the headline regarding the peace talks from Putin. Obviously, we reversed that like we did on the DAX, but from there we are continuing higher. So I would expect that to be the same thing if we did have a complete resolution with both wars and both situations in obviously Russia and Iran. But excuse me, whether that will happen is a completely different question. I'm waiting for AUD yen to cross below the 0.5 fib and close back above to buy. Daz, that is a fantastic confirmation. I like it. That's kind of what I do as well. Yeah, Bashi, I know. Flip phone. Yeah, no, not. Yeah, I mean, I've got the temptation to buy a brick phone and get rid of a smartphone. I think when I'm at a position in life where I don't need a smartphone, obviously I do a lot of social media work and things like that. When I no longer need to do that, I'm going to get a brick phone, get a pay-as-you-go SIM, and that's it. No one will ever hear from me again, and no one will have my number apart from probably just immediate family, very close friends, and maybe my broker, and that's it. Any chance you can check New Zealand yen? Absolutely, we can check New Zealand yen. Seems like most of our focuses are on the yen today. Euro pound is moving towards an interesting level. We can take a look at Euro pound as well. So New Zealand yen on the H4. First thing I'm looking at here, or first thing that grabs my attention, is obviously this sort of multiple lows we've got around here. Kind of got various different levels, but overall we've got one zone really where we're obviously seeing rejections historically. So I think first port of call, in my opinion, again, not financial advice, would be watching how we react within this area. If we start seeing rejections, a bit of a slowdown like we've seen here, consolidation periods, and then the move to the upside, it could be worthwhile being a buyer. However, if we end up seeing it break below, this could be a real issue. And this could actually be a bit of a warning sign for a bit of an unwind potentially. So yeah, I would be very, very closely watching again what happens within this area. If we end up having a consolidation period, might be worth placing a small position. If we continue higher, you could always scale into that. If we end up going lower, you can close it for a very, very small loss. Again, my opinion, maybe my approach, not advice or anything like that. Honestly, St. James's phone has just come out. It's just come out. My doom scroll trap. I have the attention span of a Dorito. Yeah, no, it's tricky. I have noticed actually the effects of short form content on myself. It's not good because I can't really explain it, but I've noticed it. It's like I'll go to grab I've got nothing to do on my phone, but I'll go to grab it. And it's just like I don't know, it's like an addiction. I've got real problems, but yeah, I'd love to get rid of it. Where's Ivan? Not seen him in forever. I've got no idea, actually. I no clue what Ivan's doing. If you look at the daily of WTI, it's testing a very major level of resistance. I tell you what, let's just remind you, we do need to look at pound New Zealand. Someone else asked for that. We can take a look at oil in a second. Thank you, James. No problem. Are you buying gold? I am already in gold positions, yes. However, don't let me deceive you. I played gold really badly. So I bought gold at 4,000. I bought it again at 4,050. So I've got two fantastic entries, but they're tiny, tiny positions. I then had another two entries that I closed out. Well, sorry, one hit stops. The other one I closed out manually at break even. So yeah, I've fudged the situation at the moment. But yes, I am buying gold. I do have two pretty decent positions I'm okay with. So Euro pound is doing what we spoke about, I think last week or a week before that. I'm not sure. Anyway, this was the idea that we were looking at. So fib from the high to the low. I was looking at this fib zone. I said, I quite like the idea of being a seller at this point. However, I wouldn't actually sell here because what I would want to see is a little bit of a further move to retest this level, which is what we're seeing at the moment. We're coming into the 200. So I would consider going short here with a stop loss at the previous high, and only if we get to a little bit higher, again, retesting these lows and then close bearish. At this point, maybe then I would justify taking a short position and looking for a correction lower or continuation lower. In terms of targets, though, I wouldn't be opposed actually to just looking for the previous lows over here. Now, this is quite a large target. Keep in mind, this is a daily time frame. But with the behavior that Euro pound does in terms of its mean reversion behavior, it kind of makes sense. It might not happen in this trade, but in a longer term idea, it makes sense for Euro pound to come back down into these lows again. We have these. Oops, that's not what I wanted to do. We have these rallies in Euro pound that can last quite a long time, like we've seen over here. But eventually, we do end up coming back down, and it's because obviously the UK and Europe are quite closely related, quite closely correlated. So when we have these rallies, it is expected that they will be corrected and sort of reverted at some point. Again, it could take months, but at some point it will happen. Oh, well, I shouldn't say it will happen. Is likely to happen. I mean, to be honest, that thinking kind of applies broadly to major FX pairs anyway. Obviously not things like dollar try. That's a completely different story. Anyway, Simo, good to see you, my friend. Hope you're well. You're doom scrolling while watching the stream. You know what? We should get... Oh, you know what's a fantastic idea? We should get Nick to replace this thing down here, the code, which you should scan, by the way, with Subway Surfers or Angry Birds or whatever it is, or like a clip from Young Sheldon. You know what all the TikTokers do to keep your attention? I think that's probably the best play to keep viewer retention high. Aussie US dollar bullish. Yes, it does seem quite bullish at the moment. I think it's still bullish on the Edge Finder, but barely. Is it? Oh, no, never mind. I take it back. It's actually increased. So yesterday, I'm fairly sure it's hanging around 4 or 5. It wasn't, it was bullish, but it wasn't a fantastic score. However, now we're getting a positive 8 reading, which again, actually really ticks me off because I was in a great position, and a trailing stop was hit, and now it's continuing to move higher, and the scores increased. Brilliant, love to see that. But yeah, in terms of actually looking for a new position here, I think I've actually missed it. So Christoph pointed out that we had a fib right here. So pull back into this level, lined up with this previous structure kind of on the left. So yeah, I think if I was going to take an entry, it would really have had to be back here. So I think really all I can do now is wait for a new high to get printed, and then I can look for a, you know, kind of the same idea. So something like this, obviously new low, print a new high, retest into the fib, previous structure on the left, and then a rejection from there. I think, again, that's obviously in a perfect world, but that is how I would approach it. So we'll see if that happens or not. You should replace it with Minecraft speedruns. Yeah. It's a bad idea. Yeah. Right. Hold on, I'm just doing a quick scan of thing. Oh, wait, hold on. I've still got 5 minutes. Never mind. I thought I was off stream, but it's all good. Year-to-date performance isn't too bad, Shrek. It's not as good as I would like. So start of the year, well, actually, I'm saying January was pretty okay, nothing special. I felt sure I was pretty break even January. February, I did quite well. I was shorting metals, well, specifically shorting gold, scalping that down. So that did really well. July also was June was a standout month, did really well in June. July was terrible. I had a really bad month in July. This month, not this month. August was okay-ish. I had a really, really good start to August. I was floating about 6% profit, but obviously the markets had a little bit of a reversal. So yeah, closed out August about 3%. So yeah, not as good as it could have been if I just closed all my positions and waited. But there you go. So yeah, actually overall this year, I think I'm up so far about 12%. Nothing fantastic, but I'm okay with that. You know, it's all right. Move 200 pips. What's move 200 pips ball out? Oh, on gold. What happened overnight? Just seeing the dollar slipped. Yes. So what we're seeing ball out actually at the moment is really strong yen action. We've also seen from Putin, this was a headline that came out, there's a chance of constructive peace talks. So I think we're seeing, a little bit of repricing in the dollar on the back of the yen, and a little bit maybe of risk premium getting priced out. Although, having said that, the markets, generally speaking, so gold, the DAX completely corrected the move they had off the Putin headline. So yeah, I wouldn't put it down to that, but it is a factor, I suppose. But yeah, ball out. Good morning to you as well. Hope you have a good day. I'm about to head off in about 2 minutes. What's my opinion on gold? So we can do gold again, I suppose, since we've got some time. Yeah, so I think gold is, I'm still torn on gold. So I would still say there's very good reasons to be a buyer, but I would also say there's pretty good reasons to be short as well. So keeping it straightforward, I would continue to look for long positions. And the reason is because the edge finder is still bullish with a score of 6. So the edge finder is bullish. By default, I would look to be a buyer. The H4 trend is held. We did have a little bit of a break below the 200. We've managed to reclaim that quite smoothly. Basically a V-shaped reversal at this point here. We are coming into this 50 moving average, but I wouldn't expect that to be much of an issue. So based on these things, I would expect gold to go higher. But then there are still headwinds. For example, we've got data coming out tomorrow for the US. If that is supportive, we could see rate hike or hawkish tones from the Fed get doubled down. There may even be a chance of a surprise. Well, I suppose not a surprise hike, but a hike in the next meeting. That is at 60% probability at the moment. Yields are still higher as well, or continuing to move higher as well. So as I said, there are multiple reasons, I think, to be long or to also be short. So I don't have a solid reason to be in gold in a short-term position at the moment. However, as you can see, I am buying gold. Long-term, I'm bullish, and that's an expression of that idea. But yeah, I think being a buyer probably is worth it, but with maybe a bit of lower risk potentially. So if you draw the fib from the low, or the recent low of the range down here to the high we've just formed, we have had a really nice pullback into the fib. So that's a really nice confluence. But again, it's just, for me, this just seems a little bit too loose. It's a bit flimsy. So yeah, I'd rather just wait and see what happens tomorrow. Peace out, James. No problem, Bashi. I'll see you soon. Simo, so you're looking at 4,600 or lower. I'm not sure what that means, but I'm assuming you're bearish by that. Do you count your swing and scalp results in the same way? Yeah, basically. Any opinion for oil? Yes, so I would expect oil to continue higher. As we spoke about earlier, I don't think there's really anything to pay. Well, sorry, I don't think there's anything in the way of oil other than headlines. Again, we're going to the weekend. We could see fluctuations and whatever. But unless we get a real reopening of the Strait, I don't think there's really much that is going to sway oil lower. So at the moment, we've still got the Strait closed. Insurance prices are sky high. There's fees. We're basically just in a situation where oil can very easily just continue to climb higher. And I do suspect that is what we're going to see. And again, I've got no reason to really think otherwise until we do get, again, that Strait reopening and some sort of peace deal solidified in the Middle East. Oh, Simon, you are long. Right. Okay, I see. So you're watching 4,600 for a reaction to the downside. Understood. Okay. Anyway, ladies and gentlemen, now it is the time for me to head off. So we've got Alan Perez coming to take over the show just after me. Guys, stay safe. Don't get margin called. I'll see you all tomorrow. Enjoy the rest of your days. And again, don't go anywhere. We've got Alan coming to take over very shortly. Have a good one.
Hey traders, don't go anywhere. The show will be right back. I just wanted to tell you about today's sponsor, that is 8cap. 8cap is currently offering traders outside of the United States a huge welcome bonus when you create a new account using the link that is being dropped in the live stream chat or in the description down below. When you create a new account using our referral link, they'll give you a 20% deposit bonus to your new trading account. For traders who prefer trading on a brokerage rather than a prop firm, this is a great option in which you get a nice little boost to your new trading account. But I do also want to disclaim that terms and conditions do apply to this, so please see the full details using the link that's just been dropped in the live stream chat. Alternatively, you can scan the QR code that you see on your screen right now if you're watching from a desktop or a TV. 8cap has several regulations worldwide and is a very well-known CFD and Forex brokerage. So check out 8cap if you're interested in switching over and taking advantage of this really generous welcome bonus they are offering our subscribers now. As always with any sponsor, please do your due diligence to make sure that this is in fact the right brokerage for you and your trading style as well as your own risk tolerances. Thanks to 8cap for sponsoring today's content. Now back to the show.
Good morning, everybody. How you doing? Good to be back here on the live stream. Well, not back. This is my first time today, but good to be back. I've been up and at 'em, man. I woke up at 4 a.m. today, so I have a little bit of energy here on my first segment, more than usual. So let's go ahead and get started. We have lots to go over. Hey, ball out. Do you see that intervention candle on the Russell there? That's crazy, man. That is something to look at here. But we have lots of volatility here. We have dollar down. We have the yen moving here. We have global yields on falling here today. You also have gold up mega. You have oil up 2.4%. It is starting to get active here. So let's go ahead and go top down here. We'll go ahead and start with the DXY technicals first, and then we'll go through it. So DXY here pushing lower here. We do have this 200-day moving average that I would like to see kind of fall through if you want to see some continuation to the downside for dollar bears. I like that. I am positioned dollar bearish at the moment. I put a trade in the VIP signals, dollar CAD short. It is doing okay right here. We're in profit. So looking to hold on to that position. And again, I'm watching DXY here at the 200-day simple moving average to see if we firmly close below, then likely we have some more continuation to the downside. Looking at the other major currency pairs, I have Aussie dollar on my watch list. Again, I'm waiting for a pullback of some sorts. We haven't quite got it yet. And if I don't get the pullback, then I'm waiting for a break and retest and continuation higher. One thing to note is that for the most part, you do have a lot of the major currency pairs bearish on the dollar. So for example, if I go to the top setups page right here, I look at Aussie dollars very bullish, pound dollars bullish, euro dollars actually not bullish. But you can see US dollar right here bearish -4. You have dollar Swiss bearish. USD JPY is very bearish, clearly, likely due to the trend. So we have some things to talk about here. Keep going down the list here. Euro dollar, this is a position that I'm in right now. I'm holding on to it. Again, my stop is way below at the 61.8 or below the 61.8. And I'm looking to target ideally 1.18. We'll see if that's confirmed or not with NFP tomorrow, right? If you have a stronger than expected jobs number, then likely the Fed can go ahead and continue with their like hawkish tonality, and maybe you have that kind of rate hike solidified there. So we'll see on that. If you have a weaker than expected NFP, then of course the Fed likely hesitates on that rate hike, as they might have to kind of stay neutral to kind of help out the labor market. So that's what I'm looking at with euro dollar here. But nonetheless, I like the positioning. Pound dollar is relatively weaker than euro dollar here. You do have it, finding some support at the 50, 200-day SMA right below it. Not looking to trade that or anything like that. I have euro dollar and dollar CAD short. Kiwi dollar, finding some support here at the 200-day moving average and this big level of support. But again, I'm already positioned, so really don't look to take part in this trade. But again, something to look at here. But yeah, if you want to be short the dollar, I think this is a good trade. I think this is a good technical trade here. You have potential for US fundamentals to continue kind of looking bad. So I would wait for NFP, and if NFP comes out weaker than expected, then likely Kiwi dollar here continues to find that support. Now, the big one here, dollar yen. This is the trade, right? This is the one that I've been saying I've been waiting on for a long time here. It seems like we are getting close to that level where I want to buy. 154 is kind of where I would be looking to buy here, anywhere right here. Gonna see what happens at the 155 mark once we do hit that. If we hit that today, to see kind of like what that reaction is, and maybe I just buy here instead of 154. But we'll see. But we are starting to see some continued sliding in the dollar yen. You overcame that 200-day SMA, so that's good from a technical perspective for the bears. And you have lots and lots of room to go to the downside. Dollar Swiss here. Dollar Swiss, guys, I have gotten burned the last 2 months here on dollar Swiss. If you guys remember, I had a dollar Swiss position before, what was it, like a couple weeks ago? Stop loss. And recently, I got stopped out on my dollar Swiss position here as we got wicked out over here. So dollar Swiss, I have a feud with dollar Swiss right now, but I cannot lie that this looks quite nice. If I was in the trade still, I would be very happy, but I'm not in the trade. But if anyone here is in dollar Swiss, what we're seeing here today from a technical perspective does look good. But again, I just got stopped out and I have no interest in retaking that position. Why? Well, largely due because I'm in dollar CAD shorts. So I got in here. Oops, didn't mean to do that. I got in here dollar CAD. Went to go ahead. I went short right here at the 50% retracement level, or at the 200-day SMA. We broke it. We're continuing sliding. I'm going to be targeting this level of support. So we're doing kind of good right there. And then, of course, if we go just global yields here, top down, you can see that they're all red here on the day. You also have gold here up 1.3%. It seems like the V-shaped recovery is in. You got the 50% retracement level, held strong support here. You've overcame the 38.2 now. You have this level here of previous resistance here that could act. So if you see bulls take over this level of resistance here, then you have open room to continue higher. But here's what I will say with this. We have all of that going on. You have dollar yen lower, or US dollar broadly lower, gold higher, but yet you have oil elevated. And to me, that's kind of tricky, right? Like with me, I'm like, okay, if this chart stays elevated for an extended period of time and the dust settles on dollar yen, because eventually it will, right? We have to remember that there are carry trade dynamics at play with that currency pair. And I would say that a lot of the dollar weakness going on right now today is largely due to the yen intervention. So when that dust settles and you look at this chart here, and this, if it's still elevated, well, what happens then, right? So something to be mindful of here. Oil is popping off. If you stay in the mid 90s here for an extended period of time, then maybe you have those inflation concerns. We'll see what happens there. Again, what if you have a combination where you have oil higher and a strong NFP, right? Then that's some like real repricing to be done. So something to be mindful of there on oil. But yeah, let me go ahead and look at the chat here real quick for you guys, and then we'll go. Yeah, and I'll start talking. Let's see. Good morning, Alan. Is a scenario where gold and USD can get strong simultaneously? Yeah, for sure. Same thing every time. Ball out says AUD USD analysis. Yeah, I like AUD USD to the long side there. It's been very, very strong relative to other currency pairs. Like if you look at AUD USD, it's kind of just been trending higher, right? Looking quite nice. And then if you look at euro dollar, right, you had like this pullback here. So the relative strength in AUD is looking quite nice. Again, I don't see a pullback, so I can't trade this. But I like the trade, but I just can't trade it personally. So I kind of look at it from the sidelines, but unless something changes, like a pullback or a break and retest, then I really can't participate. But that's my thoughts on AUD USD. Simo says tomorrow, Yellow Hair will say that Iran and US agreed on a deal. Yeah, we'll see. Let's see. Brent crude oil analysis. I mean, things have been heating up there in the Middle East, so there's no kind of question or kind of surprise here on why we're seeing oil higher today. But I think that if it stays higher for longer, it's tricky. I could see the case for this, though. Look at this from a technical perspective. If you kind of just do this right here, put a zone out right here, you could say this is resistance, right? Maybe you have some short sellers right here. Maybe you have a combination of short sellers and profit taking right here, and then you see oil kind of fall lower. So I'd be mindful of this zone. I'm going to keep this zone up here for my reference, but level of resistance possible. You could see this hold, and maybe we do something like this and trade lower, or who knows. But a level to be mindful of, and I'm going to keep it there on my chart. Elvis says USD is making me mad. Got stopped out 2 times too. Yeah, man, it's unfortunate, but it is what it is. Well, it said, Alan, you missed the gold long literally on stream yesterday and it blasted off. Well, I took dollar CAD short, so I'm not too mad. Miko's also, yeah, Miko is awesome. Is he? Yeah, I think he's coming on today, right? Let's see. a1trading.com/live stream schedule. Let's see who's on today. It's going to be Nick after me, Miko, and then Marco and myself again. Yeah, cool. Simo said, no, it's not the same. You mean taking dollar CAD versus gold? Yeah, I'm not going to lie, guys. I'm not going to lie. Gold does look way better as far as like move potential. But again, something is something, right? So dollar CAD is short, I'll take it. Gold long, it is what it is, man. I've had my fun with gold. I will say, I literally caught this move right here. So from here all the way to like right here, I caught this move. So I'm really not mad at all. Really not mad at all. Joshua, you are saying what I'm failing to admit here. But yes, you guys are right. You guys are flaming me here, but for good reason. Joshua says no amount of USD CAD short will beat the aura of gold longs. You know what? That I can't deny. All right, you guys got me there. You can't deny that. You guys are keeping it coming. The Lincoln guy says, what do you prefer, shiny rocks or boring old pips? You know what? You guys are rubbing it in. But again, I had my fun with gold. No problem whatsoever. Simo says, Alan, I'd rather work than trading FX. Ball out, you agree? Well, let's talk about FX. Let me show you what I'm looking of doing. What my thoughts are here with dollar yen. First of all, let me ask you guys, how many of you guys use AI for trading, for like just anything AI related? Type 1 in the chat if you do. Type 2 in the chat if you don't. I'm not saying like AI trading signals or anything like that. Definitely not. But just how many of you guys use like AI to kind of help you out in your trading? I have a really cool use case that I used this morning, and I really wanted to share it with you guys. I think it'll be valuable. The Lincoln theory says just poking fun, having a good time. I know, man. I know. Don't worry about it. No offense taken. Seriously. Douglas says 1. Kirsten says 1. Let me show you what I did today, guys. I look at dollar yen and I get interested, right? I get interested. And I've been saying on the stream here to you guys that I have been looking for a dip in dollar yen so I can start buying long term, right? I want to buy dollar yen. I want to kind of ride the move higher. I want to take advantage of some appreciation and some positive swaps. But how can I do that with this super volatile pair? Well, the way I plan to take advantage of it is by dollar cost averaging into this trade here. So let me zoom out and show you what I think of doing here. Let me go to the weekly time frame to make it easier to see. This is dollar yen, right? We're getting some dips here. And this is what I want to do. I want to be a buyer, and I want to be buying along the way down if it continues going down. However, I want to have maximum 3% total exposure here on this trade. And so the question that I ask myself is like, how do I structure this, right? Do I do fixed size here along the way? Do I do dynamic sizing where they get increasingly larger towards the bottom side? What do I do, right? Or do I go heavy here and short here, right? There's so many ways you can structure this trade. So this is what I did. I went to AI and I basically said, this is what I'm trying to do. I'm trying to buy dollar yen as it continues lower, and I want to risk maximum 3% if all goes to fails. If all fails and all positions get hit, I want maximum 3% total exposure. Super, super simple. And so this is what I did. It pulled me out this and I refined it a little bit, but let me just, I downloaded it earlier. All right, let's pull this out, bring it up like this, and then trading view here. And we're going to do this. And let me know if you guys see this okay. If you guys can see most of this. Can you guys see that? This is super elementary, by the way. The Lincoln says, I use it for analysis and research, but I'm super aware of the answers overall. Yeah, Lincoln, by the way, I'm not saying that, I'm not like using AI for like, hey, tell me what's going to happen with the market given this context or anything. Like this is more like a mathematical kind of type of situation that I used it for. But this is what I did. Okay, so I want to trade. It's going to be a DCA position type trade. Account size, it's a 6-figure account, roughly 100,000. And I want to risk maximum 3%, right? So $3,000 give or take, right? And I know because of the fluctuations in pips and because, you know, this and this and that, it's not going to be exactly 3K, but give or take, I want 3% kind of exposure. And so there was different variations of it. And the one that was the most optimal was this one right here, where you have basically give or take about $750 per trade per risk. And so how it works is, given that you have a tick size of, or tick value, a pip value of $6.25, this was it, right? So you have your first limit here at 154. You're risking $758. Your unit size is 7,000 units. We're trading Forex here, or 0.07 lots. Next entry point would be 148. You're risking around 779. Your unit size is 11,000 units. Then you have a cluster here, or a duo at 141 and 139.8. You're risking roughly 749, 745, give or take. And your maximum exposure is going to be about $3,033.77. So this is the optimal scenarios, okay? The most optimal one. And these are the outcomes, right? So I want to know kind of what it would look like, so I'm not surprised, giving the best case scenario, worst case scenario, and everything in between. Assuming scenario A, you have scenario A where 154 fills right over here, and it goes straight to profit, right? I only get one entry point, and I go straight to profit, in that case, I will be making about $357 or less than 0.5%. If you have scenario B, where you have 154 fills and you have 148 fills, but then price never goes even deeper, so you take these two out and then it goes to profit. Well, that case, I will be making about $1,000, $1,300 basically, 1.3%. And then the other scenario would be scenario C, which is the kind of best case scenario for me, is if you have all 4 of these entry levels hit, right? All of them hit, and then it goes back into price to my take profit, which is 162 for this scenario. Then I'll be making about $10,000, $195.91, about 10% return. That is the optimal scenario. This is not including positive swaps along the way. And then if all goes to crap and you have scenario D where you have all of them fill, but then you hit stop loss, I only lose the $3,000. So this is just a use case that I use on how I can structure this trade, right? So kind of unfavorable scenario is $353 of profit. Mid scenario is $1,300 profit. Best case scenario is $10,000 profit. And then worst case scenario is 3% minus $3,000 profit, right? Likely you get the scenario of probably scenario A or B. And then, of course, if you have scenario where you have all of your stop loss gets hit and dollar starts to roll over past 140, then at that point you have probably some bigger issues at hand. All right, you're probably having some kind of a deleveraging event, broad selling, right? At that case, you take the $3,000 loss and you kind of like start to scramble and see what you can do at that point, right? At that point, you're seeing something different. But this is kind of like a way for me to map out every possible scenario. And I got the idea. I was on a call with Chris, and he was kind of showing me around options, and he was basically like, just draw the chart, right? Drop the chart and then structure the trade around that. So this is kind of my way of doing that here on FX, without options or anything, kind of just very vanilla. But yeah. Yep. And I hope you guys like that. So that's what I'm looking to do here with dollar yen. That's going to be my plan here. And we'll see how it goes. But the more drop, the better, I would say. Let me fix this. The more drop, the better. We are getting very, very close to the first entry point. So we'll see how that goes. Let's see here the chat. Stimo says too much for me. Thank you. All right, fair enough. That's an amazing and essential way of planning a trade most traders don't get. You just gotta be prepared for everything that can happen. You know, that's kind of the way to go about it, I would say. Sluggy, you do it too, case scenario planning. Thanks, Professor Allen, for the math class. Well, here's the thing, man. I did zero math, right? I did very minimal math. I just said what I want my exposure to be, my levels, and stuff like that. And then the AI kind of mapped it out for me, right? I gave it my account size, the pip value, all that good stuff. And then it did all of it for me, though. Ace for High says, I would buy heavier first, or at least equal weighted, just for the swaps, since this is a multiple week trade. Yeah, the thing is, if you buy heavy, so I kind of went through this, and I showed you guys the optimal. If you buy heavy right here, and then you start getting filled way down here, your average cost basis only moves so much. Whereas if you buy heavier towards the bottom, if you buy heavier towards the bottom, your cost basis moves with it. And so any appreciation after that becomes way meaningful, way better. And then positive swaps along the way. I get that. The trade-off is like positive swaps up front or potential bigger appreciation. I would say the appreciation would be better for me, because really, guys, the positive swaps, it is a factor, but it's not an overwhelming factor. Like, it's not going to, like, you're not going to be making 50% of your profits in positive swaps unless you're holding that trade out for like 6 months plus, right? Like, there's no way I'm going to get $5,000 worth of positive swaps, you know, unless I'm holding it for a very, very long time. So I personally kind of optimized for the appreciation factor rather than positive swap. But again, to each their own. And also realize that it would be a stretch for me to hit all of these, right? So for me to hit all of these buy limits, I know that's a stretch and it likely won't happen, right? The probabilities of hitting all of these and then moving straight higher from that is very low, but that's just how I structured it. Is depositing some of your own money really necessary to help your account grow? Yes. It's just like the compounding effect, you know? And then what AI do you use again? I use a lot. For like the creative stuff, I've been using Higgsfield, and so that gives me access to like the image gen for like GPT, Gemini, all of those, even their own like in-house ones. For what I just showed you, the math aspect and more like strategic thinking, I use Anthropic's Claude. A says maybe heavier at the 148 level. The 148 level, so I was looking at that. Let's kind of zoom out here. There's an inefficiency here in this chart. You have a gap right here. So there's a very likely chance that you feel this gap. If you start to break these levels of structure, you feel this gap here, and then you kind of trade higher. I could see the case to be made for 148 being the heavier position. But again, I just want to optimize my kind of risk reward ratio. And again, I think like heavier at the bottom is probably going to be the way to go. And I'm very okay and receptive to like just making less on the trade. To me, that's perfectly fine. This chart is very volatile. It moves a lot. When it starts moving like this, there's really no structure to go off of. So I'm really trying to like, low size, wide stops, and if anything, I'm heavier at the bottom rather than the top, because I would hate to be heavier up here and then this chart really starts to roll over. Then I'm hurting here. I'm trying to like claw out of the trade. I'm like looking at the P&L and everything. It's just trickier. So that's kind of my thought process on that. How are fuel prices for you currently? I think it's $3.70 right now. $3.79, $3.77 a gallon for 87. Yeah. Let's see. I see some stuff hopping on the chat, so let me make sure it's not for me. Okay, no, that should be good. OT says, "Rip if you drive diesel." OT, I haven't seen you in a while, man. Good to see you in the chat. But yeah, this is the trade I've been waiting for a while. It could have came, it could have not came, but it starts to come. Starts to seem like it's starting to come to fruition here. So I just wanted to be proactive, build out the trade, build out the scenarios, and then share it with you guys, so you guys can see how I plan to kind of approach it. And of course, as I'm trading this and navigating this along with my other positions, if you guys want to join the VIP Discord, I'm sharing my trade signals now. I shared my first one, which is dollar CAD shorts. We're in the trade here. It's doing well. So with this trade and anything beyond that, of course, I'll be sharing it with you guys in the VIP Discord. So if you're in there, if you kind of want to look at how I approach things, feel free to join. We would love to have you. Let's see. Yields. It's tricky, man. Very, very tricky. So I was saying, like, what happens when the Japanese yen stuff settles, the dust settles, and then you look at what's been happening. You have oil higher. You have, yields are right on the day, but they're still relatively higher. I'm like, what happens to the dollar then? Tricky. You also have DXY here at the 200-day SMA. I imagine that it probably hangs out here until NFP tomorrow. And we'll see. It'll be a very pivotal moment because, again, if you have weaker than expected NFP, likely you take the 200-day moving average and you start trading below and you continue with the trend to the downside. But if you have stronger than expected NFP, you probably see this 200-day moving average act as dynamic support, especially considering that we have oil higher, yields elevated. Likely you have some kind of like dollar bullishness under that. So they're very, very important chart to watch, something that I'm looking at very, very strongly. And of course, depending on what happens, I'll be having to manage my trades, and I'll share that with the VIP Discord as well. let's see what you guys are saying here in the chat. What do you think about lower time frame reactions between 4,500, 4,600 on gold? I would say gold has been definitely volatile. I mean, you've been seeing, this big swing low. Now you're seeing a reaction here. When it comes to the lower time frame, you invite a lot of noise. I tend to see better clarity, better performance when you kind of zoom out here. I say daily chart is perfect, a weekly chart. 4-hour chart is kind of the lowest I would go. So as far as going down to lower time frames to kind of see reactions of certain levels, I kind of don't really do that at all. The current level that I see on gold right now is right here. So if this level I could see acting as resistance, right? So if you were to see this level of potential resistance, break, retest, continue higher, then you are definitely kind of poised and positioned for probably more gold upside. And so if you're in the trade, congratulations, maybe you can trail structure below here, whatever. You also have the 200-day moving average that could act as dynamic resistance as well. So that's another hurdle that you would probably have to overcome. But the story for gold looks quite well, I would say. I like the reaction that we saw at the 50% retracement level. Strong support there. You overcame the 38.2. Look at that. It's continuing higher. What is going on there? There it is. There it is. Dollar yen down 2% today, and that's going to trickle into everything else. You have gold here popping off. Lots of things here moving today. So you probably have some more volatility. I think I just saw Financial Juice come out. What was it? Jobless claims. There it is. Jobless claims 206, forecasted 205. So kind of in line there, but volatility starting to kick in. So we'll see how the day progresses. But thank you guys. I'm going to pass the show over to Nick, and I'll be back here within an hour. So thank you guys. Have a blessed rest of your day. See you soon. Bye-bye.
Don't go anywhere, traders. The show will be right back with our next show host. But before we get back to the show, I wanted to mention today's live stream sponsor, Ola Prime. Ola Prime is one of the fastest growing prop firms that I've seen in the space, and they offer a super wide range of different account types. Whether you trade Forex or futures, whether you're a swing trader or you're a day trader, they have multiple different account types, and they have some of the most competitive pricing that I've seen in the industry. And check out this publication from Deloitte, who did an audit during a select period of time on Ola Prime and its payout legitimacy. One of the big things that Ola Prime is well known for is their very fast payouts. They have this posted up all over their website as one of their main reasons that traders like them. From what we've seen, they also have a very strong reputation overall within the trading space, and they are a proud sponsor of our everyday trading stream here. And for a limited time, if you use our promo code that you can see on the screen right now, A1 Trading, you can get 20% off any of their accounts. And using our discount code lowers the barrier to entry, meaning that your challenge costs you less and gets you that much closer to potentially getting a payout someday. Of course, to throw my 2 cents in there, I'm a big fan of not trying to get funded until you feel you are actually ready to do so. So if you feel you have the skills, if you feel that your trading is up to par, and you do your due diligence on Ola Prime to see if it's right for you, then make sure use our promo code to get that extra discount at checkout, and we'll be dropping the link to them down below in the live stream chat. You can also find it in the description, and we'll have a QR code on the screen right now that you can scan if that's easier for you as well. So thank you to Ola Prime for sponsoring today's live stream. Now back to the next show. All right, guys, we are back. Welcome back. Thank you for being here. Shout out, Alan. That was a great segment. As always, enjoyed listening in on that one. And I have to say, guys, I was in a writing mood this morning. I am not a big writer, but I felt righty today. And I shared like this little blog post thing. And I didn't use any AI, by the way, just to clarify. But I wanted to share it with you guys because I think it's just kind of an important lesson. And I won't sit here and like hardcore read through this. But basically, the point that I was trying to get across with this post that I made this morning, I put it across all my socials, is that when it comes to trading, you are quite literally never, ever comfortable. I've been doing this 10 years. Since trading, I've never been comfortable. Like, trading is uncomfortable. It is just not a satisfying, soothing, relaxing process. It is eternally challenging, a puzzle. It's like playing chess. You're never playing chess and feeling just cozy and satisfied. You're always constantly thinking of next potential moves. And when it comes to trading, it is the exact same thing. For example, if you're stuck in a drawdown, obviously you're thinking about like, Should I change strategies? Is my strategy broken? And if you're in a profit, even when you're in profit, even when your trades are going well, the natural questions that start flaring up in your brain is, should I close my profits? Should I get out of this position? I don't want to lose what I've got here that's working. And then what about if you missed a rally? This is super, super. I have a lot of people, unfortunately, who I've got some emails and messages today and comments on YouTube, for example, of people frustrated that they now have missed this rally, that it looked like it was rolling over now. So people who missed the rally on the upside were frustrated, myself included. And then it starts pulling back and they missed the pullback and now it's starting to move higher. Now, of course, gold, we don't know the future and things could come right on back down and we could retest the lows. I'm not saying that's impossible, but I'm telling you that psychologically, here comes another kind of frustration round of like, hey, I missed the pullback and now it's rallying. What about if you bought too late? What if you bought today on gold? You're like, dang this thing, it's going higher. I'm buying because I'm not missing this thing. And that's the top and it rolls over. Obviously, that creates frustration and uncomfortable situations. The point is trading is never, ever, ever comfortable. But then I put in this little prompt. So in that case, is trading just a miserable existence? And the answer might surprise you. I wrote here that while there is never a point where trading is quote unquote comfortable, there are certain things that we can do to make trading more psychologically manageable or tolerable. Here are a few tips that I have, and this is really big because especially when gold makes these kinds of sharp moves, a lot of people get very frustrated. They throw in the towel, they quit, they change trading strategies. These are natural reactions to these things. I should have traded with bigger size. Exactly, right? Exactly. Like you're looking at it and you're like, I have a great trade. I should have quadrupled my position size, right? Hindsight is super dangerous too. We should throw that in here somewhere. Here are a few tips that actually practically keep me sane doing this every single day. By the way, for my other content creators on here, we have an added challenge of having to not only trade, which is ridiculously hard, mentally stressful, and just, it's not an easy thing to make money in. We also have to do it in the public eye. That brings on a whole new list of challenges because you have not only your own thoughts, but you have the thoughts of waves of people. That's psychologically challenging. So we're doing a little bit of mental therapy here. Not that I'm qualified, but I am qualified in the sense that I've taken my fair number of beatings from the market to at least tell you what works for me. You figure out what works for you, but here's a few things that have helped. Accept that all strategies, every single one, doesn't matter if it's the smartest money concept you ever heard in the world, and it sounds so good on YouTube. Every strategy has drawdowns and losing streaks. Nothing is perfect. Every strategy looks stupid at times. And regardless of your skill or style or experience or how long you've been doing this, it's still a fact. Every strategy, drawdowns, losing streaks, inevitable aspect of trading systems. The next one is accept that. If you accept it, then you can move forward. But if you can't accept that, if you're like, no, there's going to be a system that's a holy grail, you will chase your tail for 5 years, and then you will come to this conclusion. So you can either do it now, bite the bullet, or you can fight that truth and try and look for the holy grail that does not exist in trading. The next one is embrace that the only thing that we can actually control in our trading is our position sizing. If you choose to size down, there are so many remedies to trading psychology that come with that. It is not even funny. It's the single-handed easiest thing that every single person in this audience who is struggling to trade right now can do. Size down your trades and watch what happens. Suddenly, it will almost certainly save you from some sleepless nights. If you can't sleep because your trades are too big, the reason is your trades are too big and they're causing you too much stress and anxiety. If that is happening to you, size down your dang trades. I'm not even kidding. Or it can even save you from your whole account being blown. Simply put, from a risk of ruin perspective, the smaller your trade size, the more likely you are not going to blow your account. The bigger trades that you have, if you're risking 5% per trade, guess what? You are on, you may not even realize it, an inevitable path to eventual account destruction. Because 5% per trade, mathematically, unless you are a perfect trader, which none of us are, blows accounts. Next, stick to one system and accept that it's going to have flaws, regardless of your selection. Are you a trend follower, a breakout trader, a pullback trader, Reversal trader. Do you trade momentum? Do you trade fundamentals? Do you trade ICT? Take your pick. Doesn't matter. Choose one system that you like and accept its pros and its cons and its flaws. Sticking to a system and having a rule set gives you a foundation to hold on to in the stormy weather of trading. So no, trading is never comfortable. It is always challenging. It is never easy. You honestly might be, I wrote in this and I mean this, you honestly might be as insane as I am for doing this. And but there are some things that we can do to quote unquote manage. I hope that helps. Again, trading psychology is not something I spend a ton of time talking about, but genuinely, those are important things to think about. No one here is a perfect trader. Every single one of us has to deal with the reality that losing streaks and drawdowns and being wrong are a part of the game. You have to push through those. The secret is not avoiding losses. The secret is learning how to push through them and to deal with them and to come out stronger on the other side. That's it. Okay. With that said, sorry for the 9 or 8 minute rant on trading psychology. I am long gold. It's nice to see it kind of finally seeing a little bit of an up move here. This morning, there was some headline that was kind of interesting. We heard some Fed commentary. We had two kind of back-to-back positive things for gold right off the bat here. Federal Reserve Governor Christopher Waller said Thursday he is leaning toward keeping interest rates steady at the central bank's September meeting, provided that there are no surprises coming from upcoming inflation data. In remarks that seemed to contrast with statements last week from Chairman Kevin Warsh, Waller expressed confidence in the probably inflation story. Well, actually, you know what? Let's just take a closer look because I'm curious. Saying that Waller expressed confidence in the current inflation trends. That's what I thought. Saying that tariff impacts likely have been muted and higher energy prices. So, okay, a dovish comment from Waller, helping the bull rally for gold. The other thing was I closed out of the tab, but some potentially promising signs of peace talks between Russia and Ukraine. We'll see. We've heard so many ceasefires and peace talk promises over the last few years that I think headline fatigue is very real. But of course, if the Ukraine situation were in any way to de-escalate, it would be good for lower oil prices, which lower oil prices could tamper down yields, which had already kind of been making a move lower. I would not mind at all for my current positioning, obviously speaking, with my gold longs. I would not mind if yields were to tamper down a little bit and cool off. I think there's a vested interest from the White House to keep yields lower. And I think that they are going to throw the kitchen sink at keeping long end bond yields lower. It is mission critical for the AI trade. It is mission critical here to basically keep borrowing costs under control. If borrowing costs rip higher and bonds sell off, it is problematic for one of the biggest growth engines that is in the U.S. economy right now, which is AI, data center build out, etc. The administration wants that runway to run away, right? They do not want the growth engine to slow down. And one of the biggest threats to slowing down the growth engine would certainly be a blowout in bond yields. Why? This is borrowing costs. If borrowing costs go up dramatically for businesses and lenders are demanding higher interest rates to lend money to all of the data center stuff, that hurts the growth story. You see what I'm saying? So it is very, very critical for the administration, especially going into midterm elections, I think, to keep yields under control. So it's a thesis that I have. And I'm saying this all in my opinion. I think that they could go lower. I could be wrong. The market could show and prove me wrong. If yields rip through the highs, if gold breaks back down through the lows, then I will submit to the market that I was wrong on that theory. And I think it's really important whenever you have a theory that you also mark where you are going to be wrong. This morning, I trimmed my risk a little bit on the gold position. I had a wider stop loss that I have since tampered a little bit here, or just kind of trimmed a bit. I like to do this with positions that have gone sharply in my favor. I like to take my pre-existing risk and tighten it up a little bit. We got the reaction that I was looking for from this area. I would not be shocked if gold did come down to test this area again. But after getting this reaction, I would want to see, I want to see follow through, right? If I'm making a directional bet that I think gold's going to move higher here, I don't really want to see price come down to this area and then fail to hold that area. So now I've kind of marked up my risk a little bit tighter here, just below the 61.8% retracement zone. So if gold fails to hold this, then I will be getting out of my gold longs and resetting. What could make that happen? 3 letters, NFP. If NFP comes in way hotter than expected, the dollar strengthens and gold probably drops. But this week's data has generally trended in the direction of they're going to hold interest rates, not hike them. Let me give you my concepts here, right? Okay. JOLTS job openings came in lower than expected. ADP, private payrolls, came in lower than expected. This week's jobless claims, I think, came in maybe slightly higher than expected, so a little soft there. And then if we take a look at some other statistics here, recent data has shown that we've had manufacturing PMIs softer than expected. We'll get services PMIs today, by the way. So that will be interesting. Also, this looks like a bug. This should not be highlighted in red. So I'll take a look at that after stream. Anyways, retail sales also worse than expected. Services PMIs previous go around was softer than expected. Manufacturing PMIs softer than expected. Consumer confidence softer than expected. So what we're seeing here, in my view, is some evidence that you may have data coming in a way that makes the Fed not necessarily like, oh yeah, we've got mission critical and the growth story is dead, but rather, okay, data is coming in a little softer than forecasts had been. What's the rush to hike interest rates? And yes, you have higher than anticipated inflation, but if growth is showing any sort of weakness versus expectations, that could be enough just to keep the Fed holding rates at where they currently are rather than hiking them further, right? Because if you hike interest rates into a growth potential slowdown in any capacity, then suddenly what you might find yourself doing is 3 months later, if growth starts to decelerate further because of the hike, what if, it doesn't look good to hike interest rates and then have to pull off that hike really quickly after, right? So the Fed may simply, in my opinion, continue to hold steady where they currently are with interest rates, which I think puts some downward pressure on the dollar. And we are seeing that today. Dollar is lower today. It's a nice little drop here after retesting the 38.2% retracement. I am long gold. I am also long the Australian dollar versus the US dollar. Both trades are looking really good today. So Aussie dollar absolutely ripped to the upside here. Same with Euro dollar looking good. Pound dollar. I don't actually have a long position on pound dollar. I was just marking up an idea. But I am long Aussie dollar. And then simultaneously here, let's see what else we've got. Dollar yen. Look at, okay, what in the world? Someone fill me in. What am I missing here? What is going on with dollar yen? Oh my goodness. Down 2% on the day. Somebody give me the 1-sentence summary. Did they do some more yen intervention stuff? Look at yields really pushing lower. Gold is absolutely ripping here. Not too shabby. I will take that. Nice little bounce back. I mean, to be completely fair, yen intervention. Got you. Yen intervention to the max. There you go. So this is what I'm saying when it comes to like markets being unpredictable. We talked about how like regardless of strategy, system, etc., how are you going to predict perfectly the time and place that the Bank of Japan, the Ministry of Finance is going to intervene hardcore? You can't. The point is, as traders, you cannot predict everything. All you can do is react to what is happening. And this is actually like, this is something that I'm going to keep a close eye on, because what I want you to see is yields are sharply lower today and stocks are up a little bit. Gold is up a lot of bit, 2% on the day. Silver's up 1.4. Notice here's another thing. Gold outperforming silver so far today. You might think of that as not significant. I would argue that that is significant. Typically on an up day for metals, silver outperforms on most scenarios. But a drop in yields like this and causing this tells me there's a little bit more precious metals and safe haven reaching, as opposed to just a broad rates are coming down and silver in that case would be up like 4%, right? If we're talking a situation where it's purely just a super bullish precious metals move, silver's up usually 1.5 to 2 times what gold will be doing on the day. So that tells me there's something at play there. Oil, again, this is another thing. This is how I know it's a little bit more of a fear-based, de-risking, risk-off type reaction. Oil's up today. Oil's up 1.7%. This is why, by the way, I say this all the time. If you are a macro trader, you don't trade one chart. You trade them all. You understand that oil is a signal. Silver and gold is a signal. Looking at stocks, signals are being rattled off by the market itself all the time, the way they move. Maybe the biggest signal is keeping a close eye on bond yields. And this is interesting. I mean, the what's his name? Waller comments, voting, anytime you have Fed committee members weighing in a way that sways the vote significantly, could be really interesting. That could push back, because remember, interest rate decisions are ultimately set by, it's a vote, right? It's a democracy. It's not Kevin Warsh says go and the market hikes rates. It's dependent on the committee and their votes as a group. So it is worth keeping an eye, not just on what Kevin Warsh says, but what team says, right? The Fed committee. So anyways, dollar is sharply lower. Gold is sharply higher. And I am in no way going to shy away from the idea that although I have this really good gold trade starting, I had to take a couple hits before I caught this one. So I went long. I thought this level would hold. It didn't. It did briefly, shot higher, and then boop, dropped down, stopped out. I tried again, stopped out. Tried a third time, third and a half time. I had kind of a mess up on my initial trade, so I had to reset up the trade. But on the 3rd/4th attempt here, I've got a trade that's looking solid to start out here. But the thesis for me still holds with gold. Like gold is I have many reasons I could rattle off for why I think gold can move higher. Of course, if gold does ultimately move lower, you can have all the reasons in the world, and if something changes the narrative, I could still stop out of this trade. So this is not a win until it's a win. But I'm not going to, I mentioned earlier, I rambled about how important it is to have a system and approach and a strategy and sticking to it. This is not a win until it's a win. So what I mean by that is that if gold reverses hardcore and goes all the way down, this could still be a losing trade for me. And I accept that. I have to accept that because of my style of letting winners get really big. Sometimes I also accept that sometimes you get that. Sometimes you get one that starts off good and then goes the other way. And then in that moment, people say, well, Nick, why didn't you take some profits off? Nick, why didn't you trail stops into profit sooner? Why didn't you take a partial? Why didn't you take half off when it was at the high? Again, take your pick, take your strategy, choose whichever strategy you want, and you can always later on point out what you shoulda, coulda, woulda done better. I have chosen that the style and strategy that I use is to let winners get really big and trail stops until it's time to cut the trade. Nick, why don't you add? I already have plenty of gold long positioning. Like when I took this trade, it was already at a size that I was pretty good sized trade. Close to like my maximum allocation that I'll put on in one particular idea. And here's why. I really like the gold long setup. I think that the dollar has some downside. I think that the jobs data and economic growth data suggests the Fed should hold. And I think Kevin Warsh's comments were hawkish, but I think that he sort of was looking for the market to do his bidding more so than his willingness or desire to hike interest rates. I don't think that the Fed wants to hike rates. I think that they will hike rates if they have to. If inflation does not back down, if the jobs market is showing tons of strength on Friday, for example, I think they will hike rates. I'm not opposed, and I think it's important to keep an open mind that I could be wrong, but there's a lot of scenarios here where I see gold moving higher. And the big ones are, I think that they're probably going to do whatever they can to hold interest rates, not hike them. And I also think that the bond market is a first and foremost priority for the Treasury and for the administration. And some part of me has a little bit of a speculation that Kevin Warsh is one of the boys, right? He's, distantly friends here with the president and with the Treasury Secretary, Scott Bessent. He knows their mission. Certainly knows it better than I do. And I can rattle off their mission right in front of us. They want yields lower because it looks good for midterm elections. And it also is good for economic growth in the AI trade that they do not want to lose to China. To me, that suggests 2 letters. QE. Money printing. Buy back our own bonds, keep yields lower, run the economy hot. Whether that run the economy hot works for economic growth or not, who is a winner in all that? Gold. I mapped this out to my friend Chris Pulver, who was on the stream yesterday with me, and how I think that this points to all roads leading for now looking good for gold. Now that could change. I could be dead wrong. I say this because I've been so wrong before in front of a ginormous audience on YouTube, and I've let the market humble me many times in the public eye. So if I'm wrong, I have a plan. I'm not going to get crushed if this gold thesis is completely dead wrong. I'm going to manage my risk. I'm going to keep my position size small. Does that make sense? I've done this for 10 years. I know better than to believe. I know exactly what it feels like. If you're someone who watches this and you're like, I watch 30 other different creators, and sometimes they sound so matter of fact, so sure of an idea that they have. I'm telling you, I do have a strong opinion on gold. I think it's going higher, but I'm going to hold on loosely to that idea. And what that means, I say it all the time on my channel, hold on loosely to strong opinions. My strong opinion is I think gold's going to go higher. Holding on loosely to it means that I have a small position size relative to the account. It won't crush my account. I'm not margin to the max long gold, and one blip down costs me a car, right? That's not what we're doing here. Hold on loosely to the strong idea means I think gold's going to move higher, but I've got a small trade on. And if I'm wrong, I will manage. I will keep an open mind. I will acknowledge I was wrong quickly and cut losses quickly, right? Nick, are you in this trade now? I am. I've got a long position. I took this trade. Let me pull it up. Took this trade yesterday. Did I take it yesterday? Yes, I took it yesterday. After price had retested the bottom end of this consolidation zone, 50 to 61.8% retracement zone, kind of got tagged. And I really like the macro story as well as I marked it up here, right? My thesis is also kind of defending the bond market story that's going on as well. I think that is a part of the narrative, and I think I like that story. But that's not why I took the trade, right? The trade is mapped out for me by Edgefinder. Edgefinder is critical to all trades that I take. Fundamentals look good. Commitment of traders data shows institutions are super long gold. I don't know if you guys saw this. Institutions absolutely pig piling on gold right now. Look at this. If I go COT data history and I switch over to gold, look at this. The yellow line is long percentage versus short positions for gold specifically through the CFTC's commitment of traders data. These are hedge funds and banks. This is not speculation. This is not trying to, read the tea leaves to determine what institutions are doing through a candlestick pattern. None of that nonsense. This is straight up from the CFTC's reported weekly filing. Our software here is just showing it. Long positions are rising and institutions are bullish on gold, right? They are ripping the long side. And so I like to see that. I like to see big money kind of chasing the rally higher. That tells me I think we have some room, especially after gold's down like 25%. That looks fairly attractive to me as kind of a confirmation signal. So yeah, this tool just kind of tracks that, but it's a weekly filing commitment of traders report, and this is just showing institutional positioning over time so that we can track it. By the way, if you don't have access to this and you would like to try it, now is a really great chance to do so. We have a, I've got this link here. Hold on. It is right. I gotta find it. Here it is. Okay, here it is. So this week we're doing a free access week to EdgeFinder. What you're looking at is completely free to use for the rest of this week. You have a couple days left. That will end. If you're interested in trying out EdgeFinder, link is in the chat. Click that link, sign up for it. It'll send a copy to your email. It's a browser-based tool. It's literally a couple clicks away, and you can try it out for yourself and see if it is a good fit. But yes, we have traders around the world. We have thousands of traders using our tools for a very specific reason. It helps you build more insights and more data to build better trade ideas. So try it out. It's free to use. Why not? Yes, sir. Free EdgeFinder. Free EdgeFinder week until the end of the until Monday. Actually, we're extending it through Monday because Monday is a U.S. holiday. So you guys get a chance to extra long free trial period. So take advantage of it. Check it out. Let us know what you think. Look at that. Yields continue to move lower. Bonds up here a little bit this morning. But really the clear winner today is gold. Gold is absolutely rocketing. And I am not complaining. Although gold or silver here is starting to catch up a little bit. Now silver is starting to bridge the gap here, trading higher here. Precious metals are absolutely flying. And you can just see how quickly that the gold bull, when it wants to go, man, it can go. But I'll be updating this position. If I take any new trades, I'll share them in Discord. If you're not in the Discord and would like to be, let me just also, actually, if you guys are interested in joining the VIP, if you want to get access to it, we'll drop a link here in the live stream chat to where you can speak directly to our support team. They can set you up with access if you're interested in doing that. All trade updates go in here. So if I take a position, we also have Marco and Alan, who you may have seen previously on the past segment. Alan sharing his trades in here as well. We now have Ivan, Chris Pulver. So a lot of the cast here that you see on the regular within our stream team here, they're also leading the charge within our community. So you get access. If you're a VIP member, you get access to a bunch of trade alerts from a bunch of our traders here. Message right here if you're watching during the live stream. We are currently doing a 45% off discount for memberships. So shoot us that message if you are interested in signing up for that, and we'll get you hooked up. With that said, guys, up next, you got Miko Audu taking over the stream, talking a little bit of trade setups that he's watching now. Stay tuned. We'll be right back after this. If you're looking to get funded and want to save big on prop firms, check out our website, a1trading.com. On our website, we have a massive catalog of different sponsors and prop firms that are offering really competitive prices to our live stream viewers. On the screen right now, you see a QR code. If you scan that, it'll take you to this page that I'm looking at to scan all the different offers. You can also filter by one-step and two-step accounts. You can also look at futures, Forex and CFD prop firms, and even prop firms offering stocks. You can also select your preferred prop firm challenge size and check out our menu at the top for tons of different prop firm perks and giveaways. For example, every Monday we do a weekly prop firm giveaway that you can sign up and add your name into the hat for free. Additionally, we have prop firm reviews for notable firms, and we even have a side-by-side comparison tool where you can compare two firms head-to-head. Save big and find the right prop firm for you over on our website, www.a1trading.com. Thanks to our various sponsors who make this show possible. Now back to the content. Sorry, guys. Looks like we've got a little technical difficulties. Miko might need to come back in here in just a second. I'm just going to bridge the gap until he is good to go. These things happen, part of the live stream process. Sometimes you your camera freezes up. Looked like his computer might have shut down or something, but we'll bridge the gap until he is back, and we'll figure that out. Let me just see really quick here. Do we have, we do have, in an hour, we have a potentially market moving event. We have the services PMIs. Also, we have more comments from Waller here. Waller urges giving disinflation a chance. Says that the Fed can wait one meeting. I'm Team Waller on this one. If increasing capacity, the increased output is not inflationary. Fed's Waller current rate setting could get us back to 2% inflation. Yeah, so lots of dovish commentary here. We'll see if that holds. But again, gold is liking it. And I think Miko is back here, so I'm just going to, producer, we can just throw me out and bring Miko in. Try him out.
What's up, guys? Apologies. I think my internet just cut out for whatever reason, but we are back. Hope everyone is doing well. As always, guys, if you are looking at any markets, feel free to drop them in the chat. More than happy to discuss, take a look, see what you guys are trading. Of course, as always, I'll go through a bunch of markets which I'm interested in, looking to trade. Kind of my take for September, which we're coming into now. But yeah, as always, drop any markets you're interested in, and of course, any particular time frames as well. I do apologize. There's construction right outside my window, so yeah, you're gonna hear some banging. There's not quite someone in the kitchen. I wish. What's up, Bashi? Hope you're doing good. What's up, Ball? I hope you're well. Yeah, okay. I'll start with the yen because, of course, we've seen a lot of noise. Well, I say noise, but we've seen a lot of movement recently. And this has piqued my interest because we had the massive move, a few weeks back. We had a really strong move down, as we can see here. And we've had this basically a pullback of about 80-90%. And the question was, okay, was the yen pair just going to continue like nothing's just happened, as they've done so on multiple occasions? Or is this potentially price finding a bit of a top? And are we getting ready for a lot of downside, potentially a bit of a downtrend, or at least a bigger pullback? And because momentum is continuously coming to the market from the bears, it looks like we could be getting the latter, and we could be getting a bit more downside. In terms of which yen pairs I like the look of, CAD yen, Euro yen, and Aussie yen are the three which I like the look of. Of course, the yen pairs will probably do the same roughly across the board. Some maybe not as much, so it depends which currency they're partnered with. But in terms of the technicals, Aussie yen looks really interesting, Euro yen looks really interesting, and CAD yen looks really interesting. So these three, especially from the yen, the yen pairs have definitely piqued my interest. And I'm looking basically for pullbacks. We're seeing a lot of strength. And the idea is if you can have a nice slow corrective pullback to show us that, okay, the buyers are not really coming into play, I would expect more downside and just looking for a push back into support. Who knows? Maybe the yen pairs can go a lot further than that. Of course, they've been stretched for quite some time now, and maybe they are due a bit of an unravel. But from a trading standpoint, I'm not looking for the home run. I mean, there could be a lot of downside here, but even if we just get a pullback on the 4-hour chart, a pushback to lows here for CAD yen, a pushback to lows here for Euro yen, you're looking at some decent risk reward. And Aussie yen especially, there's a lot of room to the downside for this one here, back to these lows here as well. So although I'm not looking for entries just yet because we've just seen the push, I want to see how much of a push we get. Do these just keep dropping, or do we see a lot of strength from the buy straight away? Are we looking at those aspects of these moves? Because it'll kind of tell me whether this is a move to follow, or maybe I should be a bit apprehensive. But at the moment, I like what I'm seeing with the yen pairs. USD pairs have been a little bit of a hit and miss. I haven't really been actively trading USD for maybe the past kind of 2 weeks now, just because I'm trying to suss out dollar. And to be honest, the price action, especially in terms of the technicals, isn't great. So it's not really giving me much to work with. I mean, looking at the daily chart, you can see it's largely just up and down, up and down. Again, I was looking at potentially a breakout over here. It never happened. Price came back down again. We came back into this zone. We had a bit of a bounce, but no real follow through. I said on my stream yesterday, if price can break through resistance here, then I might be interested with some buys, something like that. But momentum completely failed today, and we're looking pretty bearish, and we're pushing back into that same zone. So I'm not really interested in shorting dollar. I'm not interested in buying just yet. I don't think there's a clear cut move to be had. Maybe intraday there's a bit more to discuss, but I'm looking at the 4-hour daily, and it's just very, very noisy. I think with the yen pairs moving thick and fast, and we're kind of seeing maybe a bit of a top to that bullish trend, I think there's a lot more clarity, at least with myself anyway, with the yen pairs. So I'm keeping a close eye on those. And another one I was trading last week, Nasdaq. I did get taken out break even. Well, a small win with this one. Price didn't really have the momentum I was hoping for as we came back to test support on our left here. I was hoping that price could break through this level, and that would probably allow myself the opportunity to add to the trade, because I've been looking for price to basically get back to the prior all-time high, which we haven't done so for quite some time now for Nasdaq. US 30, S&P, of course, they're retracing now, but those were a lot stronger a few weeks back. And I'm kind of still looking for Nasdaq to catch up, but it's having a bit of trouble. The trade idea is still at play, which is as long as price doesn't break through this area, I'm still retaining that bullish bias with the Nasdaq. If you do start breaking through, I wouldn't necessarily be bearish, but I would have to have my reservations with buys, just because I don't think, at least from my analysis, that the buys are showing much strength. But if we can hold support here and especially break above that resistance, which we failed to do last week, that's when I'll start looking for buys again and just keeping it really simple, looking for the next pullback afterwards if we get one. And then again, the plan is very much take it back to the highs here. Maybe this is a first target to manage the trade. So Nasdaq, I still do like what I'm seeing, but it's just a little bit awkward right now. We're kind of very choppy, sideways. No one's really in control. Sellers are not really dominant, and neither are the buyers. So I'm just being very, very patient before jumping into anything. But I do like what I'm seeing. Yes, we could take a look at gold. Absolutely. Aussie yen looks like a good entry. Yeah, I like Aussie yen. A lot of momentum. Just need some pullbacks on that market, to be honest. Same with the other yen pairs as well. That's the thing with these yen sells, is that sometimes they're quite unforgiving because you see such aggressive momentum, and it's like there is no opportunity for a decent pullback, especially like myself. I have a lot of experience trading Forex, so I like my deep pullbacks. I like my pullbacks into the 50, 0.618, even deeper. Those are kind of the zones I like to operate in, which is normally where I look for my opportunities. And when the yen pairs are dropping like this, sometimes you don't get that pullback. We'll have to wait and see, to be honest. But yeah, I do like the opportunity to short Aussie yen, especially if that momentum stays strong, and that the buy, and when we do see the pullback, it's nice and correct. If we're not seeing any strength from the buyers, then yeah, I like the idea of some shorts. We'll take a look at gold. Gold, I haven't been too interested in gold, to be honest. I was maybe three weeks ago when we got this first up move, but then again, even gold didn't give me much of a pullback. We had that strength, then it consolidated, and then another strong move. So I wasn't able to jump into that. And then gold started to trade into these areas. So I became a bit cautious, especially because we've been putting in prior lower highs, 1, 2, 3. This could be a fourth potentially. I'm still long-term bullish from gold, and I still like to find some buys, but we do have some obstacles right above our heads, which I'm a bit apprehensive buying into. And especially with the DXY kind of all over the place, I think if the DXY can show its hand, show a lot of weakness, and maybe gold shows some strength. Ooh, there we go, above this area, then yeah, I really like the idea of pullbacks and then taking it back to the prior all-time high, really. And of course, people might say this is a bit late to get involved. Yeah, I don't mind it, just because when gold has its bigger pullbacks, yeah, it might be a bit on the late side, but gold has the potential to do something like that as well. I mean, I'm not necessarily trying to catch that, but there could still be a lot of upside as well. So I'm looking to see if price can break through this zone before I'm a lot more confident in buys. In terms of the lower time frames, like the 4-hour chart, 4 hours being a bit interesting because we saw a lot of bearish momentum. It tested support, it held, and now we're seeing a lot of strength back up again. I would probably, if I had to trade gold, I like the idea of some short-term buys. I say that because we had all this strength from the sellers last week, and it looks as if that's just being absorbed by the buyers, and we're seeing price just snap back bullish straight away. So it means that I'm not going to treat this bearish move with too much respect, and I'm basically looking at this up move as a whole. So I'm inclined to treat this more as a pullback, and this is more as the dominant move or the dominant trend currently on the 4-hour chart. So I like the idea, if I drop to the hour chart, I like the idea of some pullbacks into this zone. Let's say if we can get some nice corrective downside, something like this. I think this is a smart place for a buy. There is a lot of momentum here, so I'll be a bit careful. Maybe a push back to that zone as your target. This is more like a day trade / intra-week trade. I mean, I wouldn't expect that to be done in the day. So probably take maybe 2 or 3. But I like the idea of some gold buys here. Beyond that, of course, we absolutely could. It's just that probably could provide some obstacles for the buyers there. Like I said, I do think gold is still likely to move higher. It's just I don't see a really good technical setup, at least for how I trade, to jump into the market just yet. But like I said, intraday, intra-week, this makes some sense here. At the very least, back to the prior high. So if I drop back to the hour chart, at the very least, back to, let's say if we pull back from here, that looks like a sensible trade. You're basically just taking advantage of the momentum we found this week. Pull back, Bob's your uncle, back to the high. Very, very sensible. But yeah, gold, I think there is a lot more upside. It's just there's some obstacles above our heads, which I want to see price go and break through first. And then I'm happy to take the pullbacks. It means I do get into the move a little bit later, but I'm happy to kind of pay that cost. In terms of silver, which is a very similar situation in terms of, we go to the daily. Again, you can see these lower highs we have here. The big question is, is this bullish move potentially price putting another lower high in, or is this the real deal? Are we ready to turn bullish? I still don't really have the answer to that question, and I wouldn't really try and predict it, to be honest, just because, I mean, yeah, long term, I do think we will have that move, but I'd rather wait for price to show that with price action first and then place my bets. At the moment with silver, just because this area, again, could be a bit tricky, could be a bit noisy. We even have areas above us, which, again, could be a bit noisy as well. I just wouldn't get too carried away with the buys with silver as well. In terms of the right now, I do think gold looks a lot better because silver's basically just pulled back into this zone. Doesn't really make too much sense to be buying into that. However, if we can see silver give us a nice break through that with some strength, then I think that could show some short-term buying opportunities as well to take it back into resistance and maybe call it a day around this territory, 70.5. But it would depend on us seeing some strength that breaks through that. If not, we could fizzle out, consolidate, or even roll back over. So yeah, I'm not in love with the metals right now. I think gold looks clean intraday, but from a swing bias, I'm keeping my cards close to my chest right now. I don't want to try and force anything. I do think there is opportunity with those markets, but not ready to jump into anything just yet. I quite like the indices, to be honest. I think the indices look a little bit cleaner. Nasdaq, maybe not as much, but if we can see that up move, I think things look good. If I take a look at the Dow Jones, I think there's opportunity with this one as well. Coming into the week, I was looking for the break of this high and then the retest. I think that looks like a really, really sensible trade. Just basically continuing the uptrend, not trying to overcomplicate things. The market is naturally bullish. The trend is still pretty healthy. And if we manage to break above that, I would say there's a very good likelihood that we do end up back at the all-time highs and probably see some new ones as well. So this plan is still very much in play. If price can go and break it on this move, fantastic. I'll look for the next pullback and then hopefully take the buy after that. So I quite like what I'm seeing with the indices and the S&P. similar as well. I think probably US30 is the cleanest one. But it looks to me that, again, the S&P is correctively moving lower, potentially getting ready for another pullback, another up move, which will take us back to the all-time highs. And again, if we look to the left, we had a really nice retest of the prior all-time high, and we're seeing a really nice reaction of that. So I think it just in terms of clean price action, the indices are showing me a lot more a lot more kind of clarity than maybe some of the metals and maybe some of the Forex pairs at the moment. So I quite like what I'm seeing, US30 especially, but I think the S&P could give us a nice move as well. In terms of opportunities to trade this one, I'll probably wait for, I mean, there's two things I'd wait for: either another push back into support so I can get some nice stops underneath the level, or wait for the more conservative or more late opportunity, which would be the break of this resistance here, because it has provided a lot of resistance in recent weeks. You can see over here, massive rejection above that level. We came tumbling down, another rejection there as well. So a break of that probably means that we're pushing back to these highs. So again, similar to US30, can we find a pullback shortly afterwards? That would be very nice. And then again, taking it back to highs and hopefully beyond that as well. So in terms of risk to reward, I think the Nasdaq is probably going to give you a bit more bang for your buck, just because there's a lot more distance between price now and the all-time highs. So I quite like the Nasdaq for that reason. But yeah, each of them looks pretty good, but we still need to get that move first. We still need to get this move that, you know, that breaks resistance, and then we get the green light to be looking for buys. If not, we could continue to consolidate here, or we could even break lower and have a larger pullback, and that will give us, you know, a whole new dynamic there. So it's very, very important that we're patient enough to wait for that break and then look for the opportunity shortly afterwards. But yeah, in terms of like the best opportunities I can see right now, I would have to give it to the indices at the moment. In terms of Forex, then yeah, I like what I'm seeing with the yen pairs. I think Euro yen might have just gone a bit too much, to be honest. I added Euro yen to my watch list after this candle, I think. When was this? Yeah, that was when I woke up. So yeah, and then we've just seen two ginormous bearish candles taking it lower. So it's pretty much almost hit the target there. So maybe Euro yen, I kind of overlooked that one just because it's not far away from the support level. CAD yen still has a bit of mileage. So again, if we can see a pullback, that would be nice. I initially highlighted this area for a pullback. Will we see a pullback that deep? I don't know. There's a lot of weakness right now. Hopefully we do. I think Aussie yen is probably going to be the one that gives me the highest chance of actually finding a trade. We've just about broken support to our left here. So perhaps this could give us a reason to pull back and then actually use that same zone as resistance to short from. That to me looks pretty logical, because I'm not too sure we're going to get the pullback into this zone here, which is initially where I was hoping for. Now that we've broken through this as well, this might be the next best opportunity, but we'll see. I'll let the pullback come to us. No need to chase the market. I mean, other yen pairs, pound yen's pretty much there as well. I think Swiss yen as well gave us a really strong move. Yeah, that's you taking out that low. Dollar yen, dollar yen's at that support level there as well. So in terms of like opportunity, I think Aussie yen might be one of the better ones to look out for. We've got a lot of distance between current price and that low, similar to like the Nasdaq and US30 and the S&P. Nasdaq has got the longest way back to all-time highs. Therefore, I see the most opportunity in terms of that RR situation. But yeah, I quite like what I'm seeing with the yen pairs. USD pairs, New Zealand dollar has caught my eye. I'm keeping an eye on New Zealand dollar. This is the only USD pair which I am semi-interested in trading. I'm not looking to trade it just yet, but I'm keeping a close eye. And basically what I'm looking for is the continuation of this bearish structure. So you have this move here, this pullback, this move here, this pullback, and now I'm basically looking for another one of those legs. And if that is to happen, there could be a lot of opportunity there on New Zealand dollar. It will have a USD strength or weakness will have a big say. So that's kind of why I'm being patient with the DXY, because I want the DXY to kind of show its hand first. For me, the DXY just doesn't look really clear. Yeah, I'm kind of looking at this as a big range. There's the fake out I've been speaking about, and then price is back in the middle of the range. So maybe we do see a bit more downside here. Maybe price finds support, pushes back up again. I don't have like a clear swing I'm looking at just yet for the DXY. So I'm a bit in the dark here with USD. But just purely looking at the price action for NZD USD, that's the move I'm interested in. But yeah, I'm being patient before I look for entries. What I would want to see is another bearish leg lower, taking out this low. At that point, I would say the likelihood is that we are going to push to this low here. So then hopefully I can find a nice pullback and then trade it back into lows. And that's the trade I'm after. So yeah, New Zealand dollar could be something to be interested in, but not quite yet. Euro pound, I feel like this has probably left me behind a little bit. I was hoping to catch some buys, but it just broke out this morning and it's already smashed into some zones to the left here. So I think I will leave this one alone. EuroCAD, I like EuroCAD. EuroCAD, I'm keeping a close eye on. It's not quite ready yet. I do want it to break support here first before I do start looking to short it. But essentially what I'm looking at for EuroCAD is the market that is probably in need of a big downturn. I mean, if I go to the weekly chart, or maybe even actually monthly chart, I think that would show the market a little bit better. You can see where we're trading on the monthly chart. It's undeniable in terms of the prices where we're trading and the fact that the market is probably a little bit stretched and there is room for us to push down. Now, I'm not looking for, a complete reversal, something like that. It could happen, but I'm just generally not interested. It probably would take maybe a couple of years for that to happen. I'm not looking to hold on to a position that long on EuroCAD. It's just where we're trading is definitely of an interest. If price is going to fail the breakout, we can probably expect to see price, see some downside. And that's really what I'm trying to bank on. So if we do drop to like a daily chart and zoom in there a little bit. Yeah, essentially, if this is price, respecting that trend line, being very consistent with these lower highs, if that is going to be the case, then I do think price is just going to fizzle out and come back into support. And that's the trade I'm after. Maybe not even in one go. But if price can break support here, that shows that the buyers are not really strong anymore. They're not really holding any territory at that point. Yeah, I do think slowly we'll probably get that downturn and a push back to support here at 1.56. So EuroCAD, I have added it to the watch list. It's just not ready yet. I think, to be honest, all markets I'm looking at look good on paper, but just not quite ready yet. And pound NZD, I'm keeping an eye on this one. I do think with this one, whether we break out higher or lower, there's probably going to be a nice trade because we have just been ranging for this market for a while. And the way I see it, we're kind of having a smaller range within that. 2.31 to 2.28 price has just been ranging in between that. Big wick there yesterday as well. If price can commit in either direction, I think that's the trade I'm after. The push, the pullback, and then trading it back to the highs, or push the pullback and trade it back into the lows. Excuse the wonky drawing there. So yeah, pound NZD, I think there's opportunity here, but again, maybe we're a few days early for that setup as well. But I'm just going to keep an eye on for it. So yeah, pound NZD, something to keep an eye on, especially because the risk reward looks good, especially if you can drop to like an hourly chart to enter that trade. You can really make the most of that. But at the moment, quite noisy. So yeah, that's kind of where my head's at. Nothing's really quite set up for me just yet. I'm trying to be patient, not trying to force anything, especially when the markets have been quite choppy and not really giving us kind of clean trends, which is my strength. And when the markets are trending well, when we have that clear direction, that's really where I want to put on risk. And of course, with FX, that's more kind of 25% of the time, 20% of the time. So more often than not, you want to sit on your hands, and when the trend does show up, you want to pounce. And that's probably why I do think the indices look the best right now, because we do have that natural trend in play. I mean, maybe not so much for the Nasdaq, That's got some work to do, but US 30, S&P makes sense. And I think the metals could get a lot better in terms of their price action, but at the moment they're quite rough. So I'm going to be very, very patient with them. Yeah, I'm not really interested in trading them just yet. But let's say if we can get some more upsides and break up the highs, I think things could get very interesting very, very quickly. But as for myself, I was going to keep an eye on the yen pairs, keep an eye on pound NZD, Nasdaq, US 30, S&P. That's really where my focus is going to be for the upcoming week. And in terms of September, maybe some big moves on the yen pairs. I think Aussie yen is probably the one I'm going to pay the most attention to, just because we're not quite there yet. And what I like a lot about Aussie yen is that we've had about 5 tests of this level here, 115, 1, 2, 3, 4, 5. That there's some solid resistance. I do think, and again, even if you look at the higher time frames, the monthly chart, the market is very, very stretched. We've been arguably in this range since the 90s, and price is now in the upper limits of it. So if this is going to correct, it could correct pretty hard, but we'll see. At least push back to support. I'm not looking for anything crazy. But yeah, guys, we have run out of time. I do appreciate each and every one of you tuning into the stream, and thank you to Nick and the team for having me on. I will be back on next week. Hope you guys have a good trading week and have a great weekend, and I'll see you all in the next one. Take care, guys.
If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free-to-join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms, and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream, or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream.
Good morning, everyone. Good to be back here, you guys, for my other segment. And then we have Marco joining me here in a bit. Good to be back, guys. Hope you guys are doing well. Let's see what's been going on here. So I gave you the spiel with my dollar yen, kind of positioning my framework, how I want to approach this trade. It's continuing to slide lower here. I did see here in the background, we did have some commentary from Waller, which, remember, Waller, if we reflect a couple weeks back, he was very hawkish. And what I see here was the opposite of that. If I go down the line here, let me go on. I can actually see the actual news feed here. He was saying some stuff. He was saying how, the rate decision in August hinges on inflation, but then he was also saying that, we got to let the inflation do its thing. It's on the right path. He says he's finally seeing some signs of disinflation in recent data. It was pretty dovish, I would say, from Waller, which is out of the blue there. So let me start by doing CME Fed Watch tool. See what that's looking like. I doubt it's changed, but again, it's worth looking at. Probabilities, CME Fed Watch tool. Okay, so it seems like we went from we're now. Oh wow. Okay, so now we're seeing a potential. This is new. A potential hold September, and then hiking in October. So that's different. So the market's like holding on for look, we still think there's going to be a rate hike, but maybe just not yet. So we'll see. We'll see how that plays out. One thing I will say, though, on the inflation front, you do have, right? We cannot ignore the 10-year yield where it's at and the price of oil where it's at, right? Oil is starting to break out here. I wrote this in my markup this morning, but this is the first time that we break out of this bearish trend line throughout the war, right? This whole entirety of the war, you've had price respect this upward trend line. So for the first time, you're starting to see a breakout above that. So very interesting there, right? We are seeing broader dollar weakness here, partially due, and I would say mostly due to what's going on with the Japanese yen. But my kind of framing goes, well, once the Japanese yen stuff settles, when the dust settles, and you still see oil elevated, you still see yields elevated, what does that mean for the dollar and stuff like that? So I'm paying attention to it. Again, a lot of the price action that's coming up here is going to be influenced and kind of moved by NFP. but I'm just kind of thinking out loud here. Like if you were to see stronger NFP, dust settles on Japanese yen, and you still see yields in oil higher, then maybe I rethink my dollar short positioning. Right now, I'm still in it, right? I love it. I'm going to continue doing it. But again, that's what I need to be mindful of. And then vice versa, if you see a weaker than expected NFP, well, then likely you do see the Fed have to kind of hold rates. We buy more time, and then you see dollar weakness continue to go on forward. So that's kind of my thought process. That's what I'm looking at right now. That's what I'm going to be paying most attention to. But man, look at gold, man. Look at gold just kind of moving up higher there. We overcame that level of resistance in such a short amount of time. I remember on the live stream, I was like, look, if we overcome this resistance here, then maybe you can continue going higher. And we clearly did today. So you are above that level of resistance here. Likely, if you get a retest and support there, this resistance turns green into support, and then you can keep on going higher. But round of applause for all the gold bulls out there. I am not in the trade, but I am happy for you guys. So I'll be watching from the sidelines, enjoying you guys, and hopefully it continues higher. We do have the 200-day moving average SMA right here. That's like the next barrier that I would say you need to watch out there for gold. If you overcome that one, like you did right here, then likely you'd see continue, gold moving higher, assuming you have the Fed staying neutral, right? That's under that assumption. Let's go ahead and see what you guys are saying here in the chat. Sluggy says we're never gonna hike, man. Fingers crossed, man. I hope so, right? For the sake of the gold bulls, for my dollar bear positions, I would say hopefully we don't hike. And it seems like we're not going to. Like, well, it seems like we're just buying back that time, really, right? The case to be made for a rate hike is still partially there, right? We can't ignore it. It's still a possibility, and nothing's definite in trading. So I always have to have that in the back of my mind. Like, I know my bias is, neutral to dovish Fed, but again, I have to be open-minded to flip-flop, as we say on the live stream. So, excuse me. So that's what I have to think about. Jemiah says, dude, I've seen this question. I think I've answered it before, but is there a scenario where US dollar and gold can go long simultaneously? Yes. Let me show you this resource here. Let's go to a1trading.com. I don't know where exactly to. Can you guys hear me? Okay. Sorry. That was my fault. I'm going to touch over this right here quickly. It shows you essentially every single possible scenario, depending on what macro or kind of regime that we're under, right? So the question you gave me here, Jemiah, and you can just go to a1trading.com/macro environments map. You just go on the page there. This really cool tool shows you exactly what you're looking for. So you are looking for gold and dollar bullish, right? That's what you're looking for. So we're going to stay here. And in stagflation, you see gold moving higher, but you see dollar neutral, right? Sometimes in stagflation, you have the US dollar moving higher as well. So keep that in mind. Then you have reflation, where you have gold, silver neutral, and then you have the dollar strong. This is where you can find both of them come out strong. You have deflationary recession, where you have falling inflation and economic contraction. This is where you would see gold and silver strong and the US dollar strong. So that's your answer right there, my friend. And then Goldilocks neutral right here. And you can look at this for not just gold. You can look at gold, oil, dollar, bonds. You can even go down to the equity sectors as well. And look at that. I didn't even know this, but there is an actual YouTube video that Nick probably made here to kind of help you out with that. So there you go. Ball out. I hope you're trolling, man. I think you said you have to start all over because I was muted, but I think I said it all. But yeah, right here, a1trading.com/macro environments map. You would find the answer. So yeah. All right, let's see. Dollar yen. Let's talk dollar yen here. Looking to get active here quite soon. We are testing into this level of support. We'll see what happens here. I would be I would be a happy camper if you break this level and continue flushing. At that point, I'm starting to buy some dips. All right. I'm buying some dips. I'm going shopping and I'm willing to own it and own it and own it all the way down to 141, 139-ish area. Let's see. Ellen, can you call me friend? PK, since you are one of my bestest friends, man. You are a beloved friend, a friend for a long time. I appreciate you, my friend. You are awesome. There you go. You have it. Clip it. Do whatever you need to do with it. Indices look bullish to me right now. I would actually say that you are probably right. You know, you have Fed Waller here, slightly dovish. You have the case to be made, or you have what seems to be the Fed buying back some of its time so they don't have to hike rates. That right there is bullish for equities. And you also have, too, just earnings doing really well, right? So you have a really solid earnings environment, and then you have kind of the potential for neutral to dovish yields or neutral to dovish Fed. That is supportive of equities. And so likely we just continue grinding higher. I wouldn't be surprised if that's what happens. Thanks, clipped it. No worries, man. No worries. Let's see. Nasdaq. Yeah, same thing. Relative weakness, though. The Dow, same thing as the Nasdaq looks like. Simo, I need a cut from that clip. Yeah, man. I'll if you message me on Discord, I will send you an invoice and the wire instructions, and then we can both benefit, man. And we can make more clips if you need. That could be a side hustle. Let's see. Let's look at Bitcoin here. I did notice this here, up 2% today. Okay, so you guys know my thought process on Bitcoin. I want to short it ideally. I said this, 2 days ago, yesterday maybe. I want to see us revisit this level of potential resistance here and then see if we actually hold it. If we do hold it, I am looking for shorts on Bitcoin. I think that, you can have an environment where Bitcoin, trades within this range here. Also, too, a pullback for bulls is probably anticipated. So even if we pull back to the 61.8, I can profit and just take profits there and move on with my life. But Bitcoin to the short side looks good. If we revisit this level, I would have stops above here and then target the 61.8 to give the bulls a chance to take it higher if they want to, or I would target somewhere around 60K on Bitcoin. And if I remember correctly, let me just go back to the Edge Finder to confirm my bias. I'm just going to refresh the page here. Let's see. Bitcoin. Where are you? Very bearish of -7. Yep. So the Edge Finder is aligned with it. So I would gladly take that trade. Now I will say I'm not an expert at Bitcoin. I'm not a Bitcoin specialist. I still think it's a very risky and volatile asset. So my risks would be extremely, extremely small, right? This is just me having fun with Bitcoin. That's all. So it would be very, very strong. So keep that in mind as well. And by the way, if you are new to the streams, you've never seen what I'm looking at before, this is the Edge Finder. It basically gathers all of the macro, sentiment, technicals, all of that all in one spot. It consolidates it for you, and it gives you a reading, bullish or bearish. That way you're always trading with the macro and the sentiment and the trend, and it just filters it out for you. For example, Aussie US dollar, very bullish, right? If you go to the Aussie US dollar chart, you can see that it is trending higher. So what you would do in this case, you just wait for a pullback of some sort, right? Wait for a pullback to the 38, the 50, break a retest. If you get one of these two scenarios, either a retest or a pullback, when that happens, you just reference the Edge Finder. If it's still getting a bullish reading, I would personally execute, right? That's how I would use it. And you just go down the list, right? You have so many reads that you have, right? So for example, Bitcoin, I just told you, Bitcoin is getting a bearish reading. Well, I'm waiting for it to tap back into this level of resistance. And if the technical picture holds and this level of resistance holds firm, then I would short this, right? And you just go down the list, right? Bullish, bearish, and you just kind of filter out the best possible trades for the given kind of environment that you're trading under. You have lots of things. You have dollar Swiss, which dollar Swiss here, I've personally gotten burned a lot with dollar Swiss. Haven't had the best of luck, but again, dollar Swiss here, if you were to zoom out, you have this level of resistance right here that we recently have been tapping into. You have a bearish reading. That's another opportunity that you can take advantage of as well. So there's lots of things, and the beauty is that it's always giving you something, right? Like there's never a time. I've never seen Edge Finder just have everything neutral, right? And the reason is this macro and sentiment and the money is always flowing into the next best thing, and this helps you capture the next best thing. So Go ahead and check it out. You can use code Allen at checkout if you want to help me out. But this is a very, very strong imperative tool to your trading. I love it. USD CAD, what's your long-term target? Do you think you can get to 1.30? Let's go ahead and look at USD CAD. I took a trade on this. I put it on the VIP signals. Let's see, 1.30. Oof, man, that's far out there, man. That's 130. Jeez, I don't know about 130. I'm looking to kind of trade into this next zone. So with currencies, I trade zone to zone. So I'm looking to target 1.375, this area right here. I'm also being mindful of this gap that we have. This, if you go to like a, I don't know, 4-hour chart, for example, you have like an inefficiency, it seems like right here. Maybe you feel that, and then you continue higher or continue lower. I'm sorry. That's what I'm looking at. But I'm just trying to trade a zone to zone here on dollar CAD. And again, I might take the trade off before NFP if it gets to profit deep enough. So if you are in the VIP Discord, I will be notifying you for sure. I'm gonna be on vacation and I'm not gonna have the best signal, so I kind of want to manage it strategically. So yeah, let's see. Bala says soon you missed the move of a lifetime. You won't see this again until blue moon and Simo turns into a werewolf. Which one are you talking about, Bala? Which opportunity are you talking about? Hey Marco, how you doing, man?
Hello. I'm doing pretty well. What about you?
Pretty good, man. Pretty good.
You going on vacation?
Mm-hmm.
Cool. When? Because I'm going soon as well. So it's gonna be an empty stream.
I'm going all next week. Well, I
next
leave.
week.
I leave.
Okay.
I leave to Houston. So I was at the dentist with Alize, and we were like talking, and they were like, "Oh yeah, they're going on a cruise," and we're like, "Oh, we love cruises. Like it's awesome." Okay. She was like, "Yeah, if you like look up a sailing that's coming due very soon, you can get like a very good rate on it, right? Because they're trying to fill spots." So we're like, okay, and this was like a week or two ago, and we're like, okay, cool. We got all excited. We went online and we found a pretty sweet deal. So we're like, all right, let's take it. So it was pretty last minute. We're gonna be leaving out of Houston, Texas, Galveston area. So we're heading over there right now after this segment. I'm gonna be heading over there to Houston because it's my grandpa's birthday celebration. So we're gonna spend tonight there. And then Friday we'll be with my goddaughter, and then on Saturday we'll head out. We'll go to the Caribbean. It's Costa Maya, Honduras,
okay, cool.
and Cozumel.
Cool. Is it a cruise ship or a sailing ship?
A cruise ship.
Cool. Well, if you can pop down to the Strait of Hormuz and just let us know the situation there, just a small detour, it would be highly appreciated.
I would love that, man. I would love that.
But yeah, definitely have fun. That sounds awesome.
Thank you, man. Thank you. And where are you going? So yours is not next week, it's after?
Yeah, it's the week after that. I'm going to the seaside, but in Croatia. It's basically near Dubrovnik, so near where you were.
Is it like split? It was split, and then you said we're gonna do the island hopping, right?
Yeah, basically something like that. It's a small place near Split where my fiance has an apartment. So we're gonna be there, maybe rent a boat, go island hopping. That's kind of the game plan. I'm gonna try and stream the second segment, by the way. So depending on my internet connection, I'll try and do the second segment. So we will still see each other.
Sweet,
if the internet is fine.
I when I go back, we definitely want to go back. We definitely want to go check out Split, and I think it's Var, right? Var.
Oh yeah,
right across.
Yep, exactly.
Yeah, that sounds like fun, man. Have you been
Absolutely.
to Var?
Once when I was small. So now it's time to go back. But it's like one of the prettiest islands in this region. So yeah, it's amazing.
Dude, you are so lucky to have that seaside. It is so beautiful, man. That water.
Yep, nice. Absolutely. It's just I need Starlink so that I can work from the go or on the go So we're gonna have to look into a possible Starlink. I know like you can buy the satellite thing, which for traders, if you're on the run, that's amazing, but it's pretty big. So I think they're coming out with something new that you can actually connect your phone directly with the network without an actual satellite. So you just put in an eSIM, I believe. But the key with that is you cannot be in a closed room. So you need to have access to the sky because the signal from the satellites doesn't travel well through like a building. So that's a possible idea on SpaceX right there. A trade idea, I mean, if they actually go through with it or find some sort of a solution. I'll be the first one to switch. Let me tell you, these local providers are shit, and I would love to switch to SpaceX.
So we actually I think in the US there's a company carrier called T-Mobile, and I think they have Starlink as an addition that you can have. But I actually wanted to bring Starlink onto the cruise ship. Like I was thinking about that, so I could like continue doing the live streams and stuff like that. But one, it's like frowned upon. Like you're not supposed to bring it on. And two, I was reading that this guy brought his Starlink, and it was sometimes not the best connection. It was very choppy because what happens is like the cruise ship also has Starlink in a way, I think, but the service prioritizes the cruise ship first over you. So you're basically going up against this whole cruise ship to capture internet, and so it can be very choppy. I'm gonna get the internet plan to continue doing some work and stuff like that, but I don't know how reliant or how reliable it's going to be. So that's why unfortunately I'm not going to be able to stream on there.
Yeah, no worries. I'll miss you, but I'll survive a week. So the week after that, you'll be back, right?
I'll still be on Discord, man. Maybe I have enough internet for like some chatting and stuff. I'll definitely be looking because, dude, we have lots going on. So let's talk about this, right? We have dollar yen moving lower here, big time, down 3% on the week so far and counting. You have NFP tomorrow, which is going to be very pivotal. You have oil elevated, right, which is interesting, right? Like that's like inflationary fears. But I don't know if you saw what Waller was saying, but Waller was basically talking down everything. It was like, nah, don't worry about it. It's gonna be fine.
Really? I didn't catch that.
Yeah. And Waller was super hawkish if you reflect like Waller. 3 weeks ago. Yeah, Waller, man. What's going on there?
Thank you, Waller.
Yeah.
Those guys they're not gonna hike. You know, like I mean, what are we talking about? Like they last time that they started a hiking cycle, inflation was at I think 7 or 8%. Currently it's at 3.4. And we have the midterms coming up. Now it can happen. Of course, I can lose some money, but the probabilities are it's not going to happen, at least not in September.
I'm still under that framework too. So I'm like, that's my positioning, obviously, like short dollar CAD right now, long euro dollar. I want to be dollar bearish. I think that's going to be the case. In fact, it seems like CME Fed Watch tool is noticing that the Fed is trying to buy some time. So let's go to probabilities here. I was showing this earlier. You can see that if you remember yesterday, it was supposed to be a definite hike in September, and it looked like this. This is what it looked like yesterday.
Yep.
But today, you're seeing that we bought ourselves 1 month, and then you start moving the needle to the right. So that was definitely ugly. But yeah, it seems like the market's buying its time there. So I want that to be the case, right? Obviously, like the data that we've seen is supporting that as well from a macro standpoint, like inflation, labor, growth, right? All of that is kind of pointing in that direction. The only thing that I need to be mindful of and aware of is you do have oil now catching a bid. So that's not good. And then you also have, for example, the 10-year yield. If I zoom out here, it is at this very pivotal level, I would say. Like you have some concerns there for the inflation story if you see yields start to break out of this kind of, resistance band, especially if you start hitting 5. So that's what I'm looking at. Now, this level has held itself quite nicely over the years. So I would hope to see that this is kind of the top there. And you know how it is, like technicals have a funny way of lining up with the macro. Like, as you get to the top, something's going to happen and it's going to start to roll over. I'm thinking that's going to be the case. But what are your thoughts? Are you kind of just sticking with like that neutral kind of story, or do you also have some kind of flip-flop fears, if I will?
I'm pretty confident I'm pretty confident. I'm definitely disappointed about my gold position that got taken out just before we went back to break even. So that's a bit tough. That was my dollar weakness exposure right there. I still have the Aussie dollar running, which is fine. So the game plan at the moment is to look at the NFP tomorrow. I'm doing a game plan of scenarios that could happen. And in the scenario that the NFP comes out near zero or negative, I'll go and put more size into the Aussie dollar longs. Because if I'm quick in the first minute, 2 minutes, 3 minutes, I think I can capture some pretty good profit, because at that point, if the jobs market is not cooperating, I think the hike is just completely off the table, and there's going to be a big reprice. So the dollar will fall even more, because that is something that the Fed has been talking about the last time, the jobs market being a bit soft. So that's going to be a kind of a quick position. I'm going to need to prepare and calculate the lot size in advance. Although I think the consensus is 50K, and most likely we do print 50K. If we print lower, then that's gonna be a nice trade right there. So I'm looking to add size to dollar shorts, and I'm looking to do it on AU. I'm also looking to increase my run increase, but take a position that's not connected with the dollar. And my pick would be the Euro Aussie. Now the reason for that mainly is the Aussie right now is the strongest currency in my opinion. Their economy is doing pretty well. You got a GDP print, which is pretty nice, beat the forecast. You got 4 dissenters at the last meeting voting for hikes. And the euro going into this winter is one of the softer currencies, or one of the currencies that I would like to sell. So on Euro Aussie, I'm looking at a key support level. Let me just bring it up here on the charts. So Euro AUD, this is it. This is basically the support level right there that I want to see get broken like this. And then it's going to be game on for a possible break and retest and a nice sell setup. This is great because you get the alpha without the beta being the beta to the US dollar. But also one more thing I wanted to comment, USD JPY. If you look at this move, it doesn't look like an intervention. It looks very like a slow burning move, just trickling lower, kind of dripping lower. What do you think? Could this be the pension funds starting to sell domestic and buying, sell foreign assets and buying domestic? Because we know that was a catalyst that has been going on in the background. We talked a lot about it, or I talked a lot about it in my recaps. This looks like that sort of a move, because interventions usually look like this, and they definitely look like this candle, this candle, this candle. So just 1 minute massive drop. So the current move is pretty cryptic to me, where it's just trickling lower. What do you think about it?
I think it's a combination of a lot of things, which is gonna be like the boring answer, because I'm really not like taking ownership as to like what it is that's actually driving it. But I think that initially, like, what was it, yesterday? Yeah, yesterday we saw that like 1 minute candle or something like that, right? Where you had like a big fat or out of the ordinary red candle. I think that was a potential intervention. And I think what we're seeing now is like, now the participants of the market are starting to offload dollars and buy yen, because they saw probably an intervention. And I think it's also too, maybe, you know, you're seeing some profit taking, or you're seeing something going on leading up into the NFP report, right? Maybe the market knows something that I don't. Maybe it's going to be a softer jobs number. Maybe they're hedging that. I don't know. But I think it was initiated by a intervention of some sorts, because you did see, you know, USD JPY start to creep above 160. But I think everyone's kind of like on the boat. We're like, okay, you know what? I'm going to take this off the table, or I'm going to start shorting this or whatever. So I think you're starting to see like follow through. But I agree with you, where you're just seeing this consistent downturn. This is not intervention. Like, there's no way. Well, I wouldn't think that BOJ is just hitting this after every candle, right? I don't think that's the case. I think it's just like some offloading.
Yeah. To me, it looks like something is brewing in the background, because it also seems isolated on the yen pairs. The dollar doesn't seem to be moving that much across the board.
Exactly.
It seems to be isolated on the yen. So I'm guessing, like, my bet would be the pension funds because we also saw some chatter about the pension funds earlier this week, if I'm not mistaken, and they still have a lot of volume that they can unload, because how the pension funds work is they have a set kind of a set distribution of how much foreign or domestic assets they can hold. But also it's a range. It's not like one value where like 25% of their capital needs to be in foreign investments. It's like a range from let's say 15 to 35% they can put into foreign. And right now they're at 25. So essentially they can lower it to 15 and increase their domestic exposure to 35. So that's what could be happening. That could be happening in the background. And if that is true, well, it's another catalyst for this to go lower. Now, if the BOJ comes out with a hike, smashes this lower even more,
That's true.
it's going to be a great opportunity to be in the market for us traders. A really, really good opportunity. Like this is something that you can make a lot of money on. If this goes to maybe 150 or 140, it would be amazing.
So Marco, you know I've been kind of rubbing my hands together, waiting for something like this. So this is what I did, and this is the last thing I have to touch on because I do have to run. But
okay,
look at this. So I have a couple of orders here ready to go. I have one right here. I'm going to turn this into yellow. I just saw something on Financial Juice on my phone. Hopefully it's market moving. This right here, this is my first order. Then I have another one at 148. Why 148 is because I have this gap right here. And then I also have 141 and 139.8 down here. So each trade right now, each position is roughly $750 worth of risk. And then I went to risk maximum 3% exposure. So I have some scenarios here. I'm going to pull it up. I was doing this earlier on the stream. I downloaded it. Let me see. Desktop downloads. This one right here. So we're going to bring this right here. I'm going to put Trading View to the side. And let me show you what I kind of did here with the help of AI. So I was basically asking some math questions, and this is what we got. So trade parameters, account size, roughly 100K, give or take. Max total risk, 3%. So around $3,000, give or take. It's not going to be perfect. And then I have 4 entries. So 1, 2, 3, 4. And this is the most optimal scenario. So you could have done this a couple ways. You could have had the heavier positions up here, or you could have had them down here. But I chose kind of like the fixed risk amount. It gave me the best risk to reward scenario if in the event you had all of these get taken. So let me show you this. So with each position, it's going to be risking about $750, give or take. And then these are the possible outcomes that I kind of came up with. So in the event that only this one gets filled and then you go to take profit, I'm going to be making about $350, so less than 0.5%. In scenario B, you have this one get taken and this one get taken, and then you trend higher. In that case, I would be making about $1,300 or 1.3%. And then the best swap case, plus the swap, yeah. And then the best case scenario would be scenario C, which is this one gets tagged in, this one gets tagged in, these ones get tagged in, and then it hits profit. I would be making $10,000, 10% return plus positive swap. And then the worst case scenario would be all of them get hit, and then I hit stop loss. Well, then I would only be I would be losing $3,000, which I'm very happy with. So for me, I like the risk reward potential where like you can still get these ones tagged in and hit profit, and it's like pretty safe. You're making less money, but again, it's just something there. But then in the best case scenario, you have a very solid risk reward where you can make 10% plus positive swaps, and then only be risking $3,000.
And I'm betting if you hold it long enough, and if it unfortunately hits the full stop loss, the swap should probably pay for the loss. So it could very much end up being, if it lasts for 2-3 months, it could very much end up being a break-even position. So love it. Pretty good plan right there. I like it a lot.
And then I have kind of this thing where like if you kind of break 140, then you probably have some other stuff you got to deal with. You're probably having some deleveraging going on, correlation going to 1 and stuff like that. So like that's kind of my line in the sand from a technical perspective. We're like, okay, dollar yen should probably find some support here, and if it doesn't, then something's going on.
Yep, absolutely. That seems to be like the no-fly zone below the 140 level.
For sure. Well, thank you, man, so much. I'm not gonna be here tomorrow. I'm gonna be doing stuff, but I appreciate it, and we'll see you. I'll see you next Monday.
Absolutely. Well, have a great time. I wish you to have good weather and not too many waves. So yeah, good luck with your positions, and we'll see each other in a week or so.
Thank you, man. We may be going into a tropical storm. It's kind of hanging out there
Really?
in the Gulf of America. So we'll see, man. Maybe I'll send you some cool videos. We'll see.
Absolutely. Okay. Well, yeah. Have a safe trip. See you.
All right, man. Take it easy. Bye-bye.
Goodbye. Okay. So let's continue with this. I saw one interesting comment. Let me just try and find it. Let me see. I lost it. Just a second. I lost it. No worries. So was there some sort of a news that came out? Did I miss something? Services. Let's take a look at the calendar. I don't see much on the agenda here. UJ still seems to be melting alongside every other yen pair. So damn. Oof, I wish I held my Swiss yen. Damn. That would be a monster position. Gold is up pretty nicely. Bitcoin is up. Stocks are up. Let me see if the SPY is doing anything interesting. So let's take a look at ETF's SPY. Okay, it's above the EMAs. I can look for breakouts again. Essentially, if the SPY is above the 50, 20, and the 10 EMA, I can look for breakouts on individual stocks. And that seems to be the case at the moment. So, thoughts on the yen pairs, US ISM services PMIs. Okay, that's an orange folder. Personally, I don't think it's going to cause much action. And the DXY, damn, we're starting to approach the 98 level. So kind of the repricing I was betting on is happening, but before the actual event that I was waiting for, the actual event being the Fed meeting, right? I was waiting for that Fed meeting. My two positions are Aussie dollar longs, Aussie NZD long as well. That's what I have running at the moment. Bonds pulling back a bit, long end. What about the 10-year? Pulling back as well, doing kind of a break and retest structure right there. So that is interesting. Energy is up. I mean, oil is up. So getting more risk off as far as the Middle East goes. I can show you the Hormuz traffic, which is still flat. So nothing is passing through. And when is Labor Day? Labor Day is coming up. Labor Day USA 26, September 7th. That is on Monday. Okay, so on Monday, it's a holiday. I don't think we're streaming on Monday, but I'm not sure. I'm going to have to double check that. So my ideas for today, kind of a brief summary. I'm in two positions. I'm looking to add more size to the Aussie dollar because I'm bearish on the dollar. Because I think the Fed will not hike rates. I am also looking at the Euro Aussie to jump in if we break this level of support. Euro Aussie is also bearish on the edge finder, which is great. So if you look at the edge finder, you look at the top setups, you type in Euro Aussie, bearish score -6. So I would say that is pretty good. I just needed to break the support level, right? That's what I want to see. Also, I'm looking at the NFP tomorrow. I'm looking at the NFP. The forecast is 55K. Let's also run it through Polymarket, see if anything has changed. So US jobs August. How many jobs added? 45K volume. Interesting. So we may even go 0 to 50K. It's somewhere in between. And actually, the most volume is 0 to 50K. Now let's look at Kalshi. US jobs August. This is the rate. No, I don't want the rate. Where is jobs added? Jobs number. Okay, this is it, I think. 206,000 in volume, which is pretty good. Above 30K, above 40K seems to be likely, which means 50K is the most likely number. So the market is saying 50K, it's going to print near there, which is not tradable in my opinion, because if that prints, it's priced in. But if it prints lower, if it prints 20, 10, or 0 or negative, well, then I think a repricing is needed and you will see a reaction in the markets. The reaction will be bearish dollar, and I think it will totally smash the hike expectation. So the market is still saying there's a 50.4% chance of a hike in September. I would say it's not going to happen. So this could be repriced. If you get a very bad NFP, a very low number for the NFP, that's bearish dollar, repricing is needed. I don't think the Fed will hike into a declining jobs market. And that's, of course, very bullish for something like the Aussie dollar. Okay, I want to mention the sponsor of today's video. If you're looking to get funded, if you're looking for a prop firm, we have you covered. So we're working with Ola Prime. Ola Prime is the sponsor of the video or of the show. Ola Prime, you can get 20% off with A1 Live. Links are all over the place, meaning on the screen QR code, in the comments as well, and in the description of the video. So very easy to find. Ola Prime, no consistency rule, which is great for swing traders. I've dealt with the consistency rule in the past. It's a pain in the butt. I don't like it. Ola Prime doesn't have it. That's why I absolutely recommend it. Trustpilot. If you look at their Trustpilot, 4.5 out of 5 for this niche. That is really good. 3.5K reviews, and the 5-star to 1-star ratio is healthy as well. So again, you have to adjust the ratings for the niche. For the prop firm niche, it's very, very hard to have a score above a 4. So take a look at the reviews, read through them, talk to other traders, join the A1 Discord. We've got Max, who has been pretty successful with Ola Prime. And yeah, you can get 20% off with A1 Live. Okay. So if we go back to the charts, I still have 2 more minutes. Let me just double check. Let me double check if we have the schedule, live stream schedule. If we have Tiger coming on today. Yeah, we do. Okay, so Tiger is coming on in 2 minutes, I believe. So let me wrap it up. Let me wrap it up here. Good pitch. I can do that in my sleep. I kind of went through most of this. So we looked at pretty much everything. I can look at some foreign indices, something like the DAX, which personally I would not touch. FTSE can't even go to all-time highs. That's a problem right there. The DAX is at all-time highs or near all-time highs, which is much, much better. The SPX and the Nasdaq, they seem to be recovering. I do prefer the SPX. And for my stock picking, I focus on the SPY to see if it's above the EMAs. If I look at some breakouts, Snow, massive gap up. So this is now for buying breakouts on individual stocks. Let's just run through the list. Snow, see, this is a breakout, a massive breakout. You have the pole and you have the flag, but it's very far away. So chasing this or buying this would be a very bad idea. I'm just looking at the stuff that is green on the day. Win day, nah, not really a breakout. I don't see much. The consolidation wasn't good enough, I would say. Do you remember Cracker Barrel when they changed the name and the price absolutely tanked? So they changed it back to, or they changed the logo and the price tanked. Then they changed the logo back to the old one and the price went up. So that was pretty funny if you follow the situation. FIVN, no. Lift, no. I'm not seeing much in terms of some healthy breakouts here. Yep. This is a good one. Thomson Reuters Corporation. Although I don't think I can trade this on It's actually good relative volume as well. On my interactive brokers, I'm not sure if I have the permission, but this is a good example for me to show you. So Thomson Reuters, you have the uptrend. Now, I don't think it's such a huge one. Okay, 43% from the bottom to top. That's fine. And also, isn't Tiger supposed to be here? James, do you know if Tiger is coming on or is he off today? Because I can see him on the... I can see him on the live stream schedule. Okay, Tiger just popped in. Just for me to finish, and then I'm gonna pass on the show. So this is the structure. You're looking for a pole, you're looking for a flag, and you're looking for a breakout out of the area, right? That's what you're looking for, breakout out of the area. So you would buy the breakout, stop loss below the day's low. That's how you can structure the position. So this would probably be an entry, but I don't think I have the permissions to trade the TSX, which is the Toronto Stock Exchange. That's it for me. Thank you guys very much for watching. You can catch me tomorrow. I'll be doing live preparation for the NFP with scenario building. We're going to try and trade it. So make sure you tune in. I wish you guys good luck. And Tiger is coming on in 30 seconds. So that's it. See you.
Don't go anywhere, traders. The show will be right back with our next show host. But before we get back to the show, I wanted to mention today's live stream sponsor, Ola Prime. Ola Prime is one of the fastest growing prop firms that I've seen in the space, and they offer a super wide range of different account types. Whether you trade Forex or futures, whether you're a swing trader or you're a day trader, they have multiple different account types, and they have some of the most competitive pricing that I've seen in the industry. And check out this publication from Deloitte, who did an audit during a select period of time on Ola Prime and its payout legitimacy. One of the big things that Ola Prime is well known for is their very fast payouts. They have this posted up all over their website as one of their main reasons that traders like them. From what we've seen, they also have a very strong reputation overall within the trading space, and they are a proud sponsor of our everyday trading stream here. And for a limited time, if you use our promo code that you can see on the screen right now, A1 Trading, you can get 20% off any of their accounts. And using our discount code lowers the barrier to entry, meaning that your challenge costs you less and gets you that much closer to potentially getting a payout someday. Of course, to throw my 2 cents in there, I'm a big fan of not trying to get funded until you feel you are actually ready to do so. So if you feel you have the skills, if you feel that your trading is up to par, and you do your due diligence on Ola Prime to see if it's right for you, then make sure use our promo code to get that extra discount at checkout, and we'll be dropping the link to them down below below in the live stream chat. You can also find it in the description, and we'll have a QR code on the screen right now that you can scan if that's easier for you as well. So thank you to Ola Prime for sponsoring today's live stream. Now back to the next show.
What's going on, everybody? Hope you're doing wonderful out there. I was having a little bit of issue with my camera, trying to get it adjusted, but it looks like it is working. That's why it took me a second to pop on in the background. I got a little bit of a loose connection, and I think I got to figure that part out. But nevertheless, I'm here. Ladies and gentlemen, we are not looking the greatest on the U.S. data. We did have, obviously, a miss on the jobless claims number that we had earlier this morning. But then we did just have a good number for the services PMI. So I think I need to refresh this because we're still showing 10%. Yeah, that dropped us all the way down to 10%. Might take a few more minutes to get this updated, but yeah. So it's 20%, even though it says 10%. So once this services PMI updates, it'll put us basically back to where we started the day at. So, but yeah, the dollar didn't really care for that first number. And taking a look, let's go look at the dollar pairs over here real quick. Okay, 7:30 my time, so 8:30 Wall Street time. That was where we had the jobless claims number come in. This is a 5-minute chart of our dollar-based pairs, as well as Dixie. Had a big drop, another bit of a retrace. And then on the current report we just got, the services PMI number back here at 9 o'clock, we did have a 1-minute candle with a little bit of a boost, but so far it's just pretty well where it's at. Even if we get a little bit of a boost from this particular report, yeah, guys, the prevailing trend is going which way? The down. Not looking so great. Dollar has not been performing well. And so, you know, it's officially back to, if we go back over here to the macro scanners and the Eco Surprise Index at the bottom, but again, it's going to retrace back to 20%. So it'll still be the lowest of the majors, the 8 major currencies. And our strongest is now the Swissy and the CAD. So wanted to talk about my dollar CAD short trade I was in the other day, guys. I know that I left off on that. We obviously had let's go to dollar CAD. The quick synopsis on this is I will take this trade 100 times out of 100 times. Remember when I got in this short, I was looking at this zone over here, okay, which eventually chewed through, I guess it would have been Wednesday, only to turn around and go in the direction I suspected it was going to go to begin with. But there's nothing we can do at times when it comes to the geopolitics. Remember, those strikes did start occurring on Saturday, and they've been striking ever since. So that, of course, kind of buoys the dollar for that reason. So, but again, it pierced through. It used me as liquidity, along with probably a whole lot of other traders that were trading this zone down here, and proceeded to go in the direction that, you know, that I thought it was going to go to begin with. You take away that one little wick, and this is still looking like a good trade. But yeah, I would take that trade 100 times out of 100 times. So I am happy with it. Not happy I got a loss, but I'm happy with my performance on it because I did my part. At the end of the day, we do our part. And when we do our part right, more often than not, we'll take our losses. We'll take our lessons that we learn, right? And we'll get paid in the end. So yeah, prevailing trend is to the downside. Be happy to look for another potential spot to short it. Okay, so that was your dollar CAD, my dollar CAD that I was looking at. And it's still at this point giving us a little bit of a bearish score, -5. We had kind of peaked into neutral territory for a short while. Now we are back to the -5. So we'll let the PMI and everything get recalculated, and we'll see where we're at that point. In fact, with a bullish dollar CAD, this will probably likely go from -5 to -4, I think, or maybe even -3. I'm not quite sure. But anyway, there's at this point probably much better assets to trade than that. I know dollar Swiss was on the bearish side, so that's one that we could be looking at there. The indices have all piled into negative territory. Again, today's canceled data as far as the miss on unemployment claims, beat on SPMI, will basically kind of wash themselves out somewhat. So yeah, overall, I still like it. In fact, I think I just had an S&P alert go off like right before I was getting ready. So let me go take a look and see what I had over here. Daily chart, 4-hour chart. Oh yeah, it was just 1 hour. So I was watching, and by the way, this was another zone that I ignored. I was in that, well, I just ignored this one. I thought there were too many candles to the left over here. But up here at the origin of the strong move down, now this was a little wide, but I was kind of keeping an eye on this candle here, this last big bullish green candle before the slide started to happen, as a possible spot to put a supply in. I put a white line there the other day, and we have now since kind of pierced into it. So this is the alert that I'm in right now, or that I've gotten. So I think what I'm going to end up doing, guys, on S&P is wait for a bearish candle, a 1 hour bearish candle, and maybe look to see if we could take a little bit of a short from that. Again, the zone itself was a little wider than my taste. I don't like zones that wide. But that just so happened to be our biggest volume candle, or ultra high volume candle. I'm talking about this big green candle before the drop. Okay. So going to keep an eye on that. Not sure how excited I am about it though, because again, that's just pretty damn wide, if you ask me. Let's measure that out real quick. Proximal line, distal line, add a little bit of a stop loss. We'll just keep the math easy. 60 pips down to the bottom, and that's 104 pips. So see, that's not even a 2-to-1 reward risk. I would have needed at least 120 pips out of this, but it's kind of hard to see because it's in the way, but I only got 105. So it's not even a 2-to-1 reward risk. And part of that is because of how wide the range is up here. The reality is probably want to go down some time frames, see a little better of an entry. Maybe this 30-minute candle here, if we happen to get up to that point, might be a little bit better. That'll obviously increase the reward to risk ratio. So that'll probably be the new alert. I put that alert there just to start watching it, because again, that on a 1 hour candle, remember, that was the highest volume candle. But the 30-minute, that at least gives it a little bit better of a look, a little bit better. And I still have red volume bar candles on this leg here and on this leg here. Okay. So I'm going to watch this. I'm going to put my new alert there, if I can get it there. And I'm just going to throw this out through, we'll just throw it out through the end of next Friday. And there we go. That's going to be my new point of interest. All because the reward to risk ratio was not in my favor, guys. I prefer 3-to-1s when I measure the zone and the stop loss to the opposite swing or the opposite supply or demand zone. And as you can tell there, it just didn't give it to me. Okay. It's got to pay me before I get involved, before I get interested. Guys, let me know what you're looking at. If you're looking at any specific tickers or anything, and I'll be happy to check them out. Again, still got those strikes going on. Let's go take a look at some of these 30,000 foot view assets as far as oil. And I know gold's going to be on the list. When it comes to oil, we have retraced up to these swing high points over here. I don't think we have any. Yeah, we still don't have to my knowledge, nat gas. Okay, we don't have oil over here on the list. I don't believe so. Still pretty well neutral overall when it comes to the data. But just keep in mind, we are bouncing into a swing high from back here on July 23rd area. So I'd be interested to see what happens. Are we going to break through this structure? Are we going to break structure, break and retest type of a deal? Okay, that would be something I'm watching. I obviously drew up this supply zone here. It gave a little bit of a hesitation, but it looks like it chewed right through it. So if that's our swing high, and I don't know where the scoring is on Edge Fighter. It's neutral, but I don't know if it's like +2, +3, -2, -3. I don't know which side it's leaning towards, but if you're looking for break and retest type of ideas, there you go. Something like that. Get a good prominent push through, cut through this like a hot knife through butter. Maybe we could get a newly created, the way I trade, a newly created demand zone somewhere in this area. That would probably be a look I'd be interested in. Okay, something like that. If we're going for the long side. In fact, where are we at? I just want to go get the exact score on it. See where we're at. US oil, okay, -2. So there you go. It's looking for shorts. And with a current uptrend, got no interest in it. Even if we had a bearish score, -5, -6, -7, the prevailing trend is what direction? It's pretty well up, right? I don't have my moving averages on, but if we go to the daily, yeah, there you go. See, the moving averages aren't in my favor. We got a high point, we got a higher low, we got a higher high than this. So be careful with oil out there if you're an oil trader, because the trend is not your friend right now, unless you are looking for a bullish push. And it wouldn't be the worst idea either, because we still got the kinetic strikes going on over in the Middle East again since Saturday. So it's just kind of thrown a wrench into a lot of things. Gold, I know that's everybody's favorite. So when it comes to gold, we did drop into a demand zone, a daily demand zone. Now I drew up a 4-hour zone inside of it down here. Let's go zoom into that section real quick. Okay, I was looking at this demand. So basically at the bottom of the daily, and it didn't quite get there, did it? We wicked into the daily took off. So at this point, it's just turned into a second chance type of an opportunity for me. I had yesterday drawn up when price was relatively in this area. I had observed that we did change a little bit of a character to the upside. Big drop, base drop. And we broke through the base. We wicked in through here. So I was looking at this, guys, for a while as a change of character. Well, on a change of character, remember, what does that turn it into? Turns all these candles, if I can get this over here, all these candles into a bullish impulse move, right? Whether it's bullish impulse or bearish impulse, it's called an impulse move for a reason, because it changed a character or broke a structure. But I'm looking at this as far as reversals. Well, I already know we bounced into the daily demand. So that's really the start of it. The daily demand pushed through this whole basing structure, supply zone there. But I was looking more so for the top. So I was looking from that point as my second chance entry to be right here on this 1-hour demand, which had a couple above average volume candles come out of it. So we didn't get there. As you can see, it just said, hell with your zone. We're going to keep going. So we've got some pretty good strength going right now, I think, with the gold. We broke this structure, this structure, this structure. You could call that a double top. You could cross your eyes and call that a triple top even. So we've broke some major structures. So, hey, everything I drew up down here, I'm just going to look to raise it up. Raise it up. Now, right here, we do have a 1-hour candle. Leg out volume is pretty well nil. It's pretty well average. So I'm not too excited about that. This is the volume, or this is the 1-hour candle that gave me some volume, gave me above average volume. So I need to drill into this 1-hour candle. 30-minute gave me this fat doji candle. This is a small real body with wicks above and below. So buyers stepped in to try to push up. Sellers knocked it down. Sellers stepped in down here to try to push it down, but the buyers rejected it. And then it closed, a little bit higher than where it was at. So I wrapped a rectangle around that, because now my 30-minute leg out candle is another above average candle, above average volume. So I'm basically looking for a retracement to this zone right here. And I only care about this zone through the tomorrow. I don't care about it into next week. So I'm actually just going to set this out through 1600 hours my time, which is when the market closes here for me in Kansas. And that's going to be my new point of interest to see if I can play around with the smaller time frame traders, guys. Remember, there's a real lack of smart money down here in these areas. So it's a lot of retail traders I'm playing with. We're going to test that out, because at the end of the day, the volume tells me it's an okay move for a potential small trade. Volume gap, we got our gap, runaway gap, fair value gap, whatever you want to call it. And for me personally, this is going to be my little short-term intraday type trade. Okay. You got recent resistance over here. I wouldn't call that a double top necessarily, but the point is it basically topped out at the same area. So that could potentially add just a little bit of a flavor of resistance become support right inside of the demand. Right. So there you go. As always, not financial advice. That just so happens to be what I'm looking at on a little bit smaller of a time frame where it's noisier. So do you think I want to be risking my normal full risk on this? No, I'm going to definitely cut down the risk on this and just kind of limp in, just kind of dip my toe in the water to see if we could take a little bit of a short-term intraday trade. So that's going to be my look. I don't really have a higher time frame play at this time like I prefer, because again, the higher time frame play I was looking for was price to drop in further, not only the daily, but I wanted it to touch the 4-hour, and we just didn't get there, did we? Right. It just made the move before it hit my spot. Okay. So that was the higher time frame trade that I preferred. But now that I'm trying to look for a second chance opportunity because we've got an impulse move. In fact, we can expand that impulse move through here at this point. We've got a change of character, which is also a structural break. We got another structural break up here. Probably going to be some underlying strength. Here, I'll just draw it out again. Probably going to be some underlying strength somewhere within this whole entire move. And I look at this as, again, it wasn't weak enough. This bounce that we had from the daily was not weak enough to get a deeper retracement. It just instantly started getting stronger. So that's why I'm kind of interested just to see what happens when we get up to that spot. Okay, that 30-minute slot that I was looking at, 30-minute zone. So anyway, smaller risk. This isn't anything I'm going to be buying the farm on. This is just something to participate, guys. Participate in the market. So that's your gold. What about the retail volume? Remember, they were pretty heavy on the longs at one point. And I think we did get the shift. So I'm going to go look at the put call ratio. I think they did go back to high puts. Let's go double check that. There you go. In fact, I'm just going to change this to 30 days to make it easier to see. Look at that. High put volume. So there's a lot of bearish volume in. They have had a little bit of a decline over the last day. But overall, still pretty high put volume. Okay. A lot of bearish bets. I want to utilize that to my contrarian signal, right? Net options volume over here. I know Nick does an awesome job of showing this. Really good stuff. It's just nice to see for myself too. There you go. The bearish volume is a reality for the net options. Call volume minus your put volume. A lot more put volume left over. So another contrarian signal. And on gold, we had recently bounced into a 400 level call and put wall. Keep in mind, he's got this awesome new tool over here, guys. If you don't have an edge finder, you got to get you one. I'm telling you. Okay, we bounced into this 400 call and put wall when we look at GLD, which I, by the way, added as, to my watch list over here, so I don't have to keep clicking it. And that's where we're at, 400. Oh, that's, well, I'm sorry, we're at 410 now. So, I'm on a smaller time frame. I need to go to my higher time frame, daily. Okay, 400 down here. Now we're up to 410. What did that say for 410? There you go. So we're at another batch of put wall, call and put volume, guys. So just looking for a little bit of a retracement and maybe test out that 30-minute demand zone. Okay, simple as that. US 30. Yeah, let's look at the indices real quick because I am interested. We got everything on the bearish side over here. If we go back to top setups real quick, guys. Come on. Okay, we got Russell, we got the S&P, we got the Dow, we got the Nasdaq. So -9 or worse, guys. It's all about shorting these indices. Can we find a place to short some of these indices? Let's go look at Dow first, since that's what you asked for. Let's go look at my trend. Okay. So I would call this a lower, a downtrend. I just wouldn't call it a very strong one. Let's look at this in reverse. High point, low point, higher high, higher low, but then we have a lower high and we just squeaked in with a lower low. And now we're getting our retracement. Now we've chewed through zone A that I was watching over here. What was that, 2 hour, 1 hour? I think it was 1 hour. No, it was 30 minutes. That's right. It was 30 minutes. So this was the first zone I was watching, but just never really got that much of a trigger. 30-minute supply. We had a gap on the way out. We had ultra high volume. Look how big that volume bar was relative to the most recent ones. And of course, that's understandable because that's when the market opens to begin with. Okay, this would have been August 31st on Monday, last Monday. So yeah, naturally you're going to have a high, especially on the smaller time frames, ultra high volume bars. So that was the first pit stop I was looking at for possible shorts. But as you can see, I never got a trigger candle and it just chewed right through it like a hot knife through butter. So it seeked a better premium. That's what it did. Looks like we bounced into a little bit of overhead supply here where we had a little of a gap. And then what happened? A little bit of a push to the downside. So for me, the next stop, let's see here. What did I have up here at the top? I have something drawn up here. I think that's another 30-minute. Getting down into some of these smaller time frames I just don't really care for, guys. 30-minute, 15-minute. So there's a little bit of a smaller time frame confluence. I don't know how much weight I want to put into that. Again, it is a downtrend. It's not like our lows and highs, though, are that much lower and that much higher, especially the lows. The high, you could make an argument that was a pretty decent drop. But this most recent low, yeah, I don't like this. You could almost turn your eyes sideways and call this a double bottom. You can, as far as where the candle's closed. Right? Ignoring the wicks for a second. So I don't know how much this area at all excites me now that I look at it this way. Okay, when I drew this 30-minute zone up, and even this one up here, this was back on Monday, Tuesday, when we were still getting what looked like a pretty sharp drop. Now, part of why it probably didn't go much deeper is because what did it bounce into? Bounced into a daily demand. Right? Got to look out for these zones, guys, whether you trade them or not. It got close. It didn't technically touch it, but it got close enough. Flirted with it. And then, see, we now are getting a push to the upside. So this, as far as I'm concerned, is just too noisy. That's why it chopped through it. I'm going to delete that. And yeah, we'll just, next step is just to see what happens if we get up to the 53,700 level. It is a smaller time frame. Again, 30-minute, 15-minute zone. So a little bit more noisier, a little bit more retail trading rather than a lot of smart money. But at the end of the day, you got to love the volume bar on it. From that open that we had. Was that the open? No, that was midday, actually, on Friday the 28th. Look at the volume. So I take that back. That does look like some smart money that piled in there on this 30-minute. It's going to be my next alert, guys, for you guys that were asking about Dow. And I'm going to throw this one out through the end of next week so we can keep our eyes on it. So there you go. Right there, guys. Proximal line of that 30-minute. It's going to be my next checkpoint. So 53,711. Going to be my new point of interest. Okay. Pretty nice premium push. Perhaps that'll be long enough to where it kind of exhausts itself. We'll know by the volume at the end of the day. As this price rises, what's our volume looking like on smaller time frames? Is it declining? Yeah, I wouldn't say so. Not yet. Yeah. Yeah, because today's volume is higher than the previous 2 days. So yeah, I don't know. Even at that, it might be a little. In other words, I can't use declining volume from day to day right now to my benefit. Maybe it looks a little, I can't even utilize that. So yeah, I'm going to keep my eyes on it. I mean, just to finish my thought on Dow for you, it's for me, that's the next checkpoint. I'll just leave it at that. Okay, this alert up here. And that'll be a little more easier to stomach, considering that, again, we got down to this daily demand, but we didn't touch it. In fact, I have a red line there, so I think that's where I drew up a put call line, a put call wall line, whenever I looked at the Qs. The Qs for the put call walls. So that right there was basically where it about faced and went the opposite way. It was on that red line where that put call wall was. Okay. And again, you can find it over here on this tool. So we go over here to the Qs, the bottom, which is your Nasdaq. And what price did I just say it was at? Qs. Right here. Yeah. So it looks like must have been the 710 level. 710 over here. Kind of hard to see. 710. Yeah. So ignore the yellow. It's just right above it. Blue bar, red bar. Pretty good amount of put call volume through there. And that just so happened to be the same place when we translate that to the NQ where that red line was at down here. So I can't talk good enough about this, guys. If you don't have an edge finder, he's added some really cool tools with that and the net options volume as well. And the put to call ratio is one of all of our favorites on here, just to see where the overwhelming flow is on the bullish and bearish bets in the options market. Okay. Really, really good potential pivot points if you want to look at it that way. All right. So that was your Dow. Let's see what you got. Pound New Zealand. I can look at that for you real quick. I think that was the next one. Yep. Pound New Zealand. What did we have over here? I think we had a bullish score, or at one point we did. Yeah. +9. As always, daily on the right. All right. So we broke a structure here pretty strongly. We did get an ugly wick to the downside, but look what we got. Look what we're coming up on. And by the way, my moving average is flipped as well. My 8 is above my 21 now. So my fastest is pointed up. It's hard to tell, but the alligator's mouth looks like it's trying to open its mouth to the heavens, guys. After these 4 days of, strong pushes up. So I am now looking at this 4-hour zone down here, knowing that we've turned the corner on the daily. I mean, you can see how it's curled upwards. So the buyers are clearly trying to step into the market. And big ugly drop since yesterday, early morning my time. And now we've got a zone right here. So this is my favorite spot. If I'm looking at pound Kiwi, I do have the benefit of knowing that this last basing structure before the strong move up broke through a supply. So it broke through a structure. As always, it takes a lot of money to break through zones and structures. So at this point, I just want to see it continue to come down. And I like how it's starting to curl out. It's not just coming, it's still coming in pretty hot, but it's not coming in as near as hot as that leg out that we had. So on my retracements into my zones, guys, this is the way I like to see it right here. Almost looking like it's thinking about making a little bit of a cup. I like this. I like this a lot. Getting a little bit of basing structure, a little bit of manipulation, perhaps on some smaller time frames. Give me that spring candle for a potential buy to the top. Take profit up here. Look, got a supply zone right here. So I got a simple visual spot where I can look to take my profits. Basing structure followed by a leg out with a gap. Go back to my 4-hour and I'll end it on this. Take my take profits right here. Okay. So there you go. But this is exactly what I like to see. Now, if all these candles were continuing to be long and red like this into the zone, I would be careful, very careful about that. But now that I see some green candles starting to form on this 4-hour chart, this is a pretty picture. I like to see it because the ultimate way it's looking is, are we going to continue our bull to get our flip around like this, right? That's the picture I want to see, just like that, just like that. Okay, so hope that helps on pound Kiwi. It's not too far away. Well, we're still about 56 pips away from it. Maybe it won't hit today. Maybe it'll hit tomorrow. My wish would be it would wait until the market opens on next week. That way we can start utilizing next week's liquidity and volatility rather than open a trade on a Friday like I did dollar CAD and then have something happen geopolitically to screw me. Okay, so that's the goal. That's the wish. Ladies and gentlemen, hope you learned something. Hope you have a great day out there. Stay safe. And guess what? We'll be back tomorrow to run it back. Get ready for non-farm payroll. Guys, the account killer of red folder events is coming up tomorrow. So stick around for that, and we'll definitely help you out. So be safe out there. Talk to you tomorrow.
Have you ever wondered how you could find more trades like this gold runner, or the S&P 500 breaking out to all-time highs, or this sell-off in dollar Swiss franc, which was a clean short opportunity? Well, all of these charts shared one major thing in common. They all had powerful macro fundamental catalysts driving price decisively in one direction, presenting a really strong trading opportunity. Hi, my name is Nick. I'm a 10-year trading veteran and the founder of A1 Trading, where we build market scanning software that help traders to track macro fundamentals, crowd sentiment, and the commitment of traders' data to best understand where institutions are moving their money. Our tools automate everything from studying jobs market data, inflation statistics, and economic growth metrics, bringing it all together into a scorecard or rubric that helps to spot better potential trading opportunities through our insights offered by the tools. So if you're looking to access our tools, stream viewers get extra discounts, and we're currently offering payment plans as an option for those who would like to split up the cost of our tools into a couple monthly payments. Alternatively, we also offer a free Edge Finder tutorial course, as well as fundamental macro course that can help you to learn the concepts behind the tools. Scan this QR code that you see on the screen right now to be connected with a real person from our support team. We have helped thousands of traders level up their trading through insights, dashboards, and automation. And we are passionate about this subject because having the right tools that hedge funds and proprietary firms keep locked in key is a powerful game changer for the average everyday retail trader. To explore our products, payment plans, and just to find out more and speak to a real person about this, scan the QR code that you see on your screen right now. Alternatively, the link can be found in the live stream chat or in the description of the live stream. On our website, you can find a collection of both free and premium trading tools that our team has put together to help traders take their trading to the next level. Well, you might be wondering, how can your tools help me? Well, whether you're a swing trader or a day trader, our tools are meant to help traders of all different levels of skill, time frame, and traders that trade Forex, commodities, indices, stocks, etc. At the core of it is automation, simplicity, and bringing it all into a one-stop shop for you to scan markets more efficiently and build a curated watch list of potential trade ideas. So regardless of what you trade, we hope that our website helps you in some way. And if you have any questions, feel free to contact us using the contact button in the top right or the live chat feature available on our website. We also offer free courses on fundamental and technical analysis on our website, as well as a range of free tools like, for example, our risk calculators that can help traders to level up their trading without paying a dime. Our goal is that our tools and site help you in some small way, and we wish you the very best in your trading journey. Thanks for listening.